Alright guys, so first things first, we're going to get into a little bit of cryptocurrency theory. We want you to understand what this is that you're investing in. You need to have a basic understanding of what cryptocurrency is, where it comes from, and why we personally think it's so great. So let's get into it. First things first, there's a few things that we feel you need to know up front before you even get started on this journey. Now, obviously, this is a form of investing. It is an investment that you're making, and there are 2 points that I'd like to clear up under investing. So, the first thing is we need you to be realistic. Too many people come into this industry or any form of investing, and they're very unrealistic. They think they're going to put money in the market, it's going to be easy, they're going to throw their money somewhere and it's just a get-rich-quick scheme. They're going to take that investment and times it by 10 overnight. Unfortunately, that's not the case for most people. You need to be realistic. You need to come in this with a long-term plan. This is not a quick fix. This is something you're looking at investing in now, and you could potentially make a lot of money in the future. Not something that you're going to get rich off of overnight. So first things first, when it comes to investing, be realistic. Don't fool yourself into thinking it's a quick fix. Secondly, a lot of people think that this style of investing is a gamble. This is not a gamble. It can be gambling, but that's only if you don't do your research and you just randomly throw money at the markets without any process or without any plan. That would be gambling. In this case, this is calculated risk. We're teaching you how to take calculated risks, do the correct research, and make the correct investment. So it can be treated as gambling. However, we're teaching you how to not take a gamble with the market. Secondly, I want to go over how cryptocurrency is different to any other investment you could possibly make. And first thing with that is that you are investing in a technology that could potentially change the world as we know it. This is a huge, it's a groundbreaking invention. It could completely change the world as we know it, and we're investing in this in its infant stages. It's still very, very new. It hasn't even remotely taken off yet. We've seen some huge gains, but that's nothing compared to what we potentially could see in the future. So we're still in its infant stages. It's still very new, so we could be catching this at the correct time. Now, lastly, what can we expect? So if we're going into this and we've got a 5-year plan for this investment, what can we expect to happen throughout that 5 years? First of all, we can expect a lot of volatility. Now, what volatility means is that price is moving very violently. You can see 20% gains, 20% losses, or bigger in a matter of 24 hours. Now, I know the first point that we made here was to be realistic, and it's not an overnight get-rich-quick scheme. It isn't, but because of the volatility that we can expect, we could see ginormous gains in a very short period of time. We do, however, say that you shouldn't expect this. When you're going for the long term, it doesn't really matter how volatile the market is right now. You've got a bigger picture in mind for years to come. But we can expect a lot of volatility. We can expect to see huge gains and huge drops day in and day out. Like I said earlier as well, this is a future technology, so we could expect this to completely change the way that we operate on a day-to-day basis. And then lastly, a lot of people do expect this to be a bubble. However, we do not. We do not think this is a bubble. And what do I mean by bubble? I mean it's going to grow to a huge point, and then that bubble's going to pop and everything's going to crash and everyone's going to lose their money. Now, we definitely don't believe that. Like I said, this is a future technology that we believe can potentially change the world as we know it. I don't know how to stop this fucking recording, dude.
Okay, guys, so now that you're going to be investing in cryptocurrency, this is a list of terms that you will come across. First term is crypto, which is basically just the abbreviation of cryptocurrency. When we get to the term altcoin, altcoin stands for alternative coin to Bitcoin, which means any other cryptocurrency that is not Bitcoin is described as an altcoin.
Next, we get to bullish or long, bearish or short. So basically what those mean, bullish or long means that price is going up. Bearish or short means that price is going down. The way I like to remember it is that when a bull attacks, it strikes up with the horns, and if something is long, if it's very long, you would look up at it. So price, when it's bullish or long, is going up. When it comes to bearish or short, when a bear attacks, it strikes down with its claw, and when something is short, you look down at it. So bearish or short means that price is going down.
Okay guys, now we get to the term rally. Rally is basically a rapid movement of price to the upside. That is what rally is. The price is rallying to the upside. When we get to the term fiat, you will come across this as a fiat currency called fiat currency. Fiat currency is basically your normal currency, such as the euro, US dollar, rand, etc. When we get to the term FOMO, FOMO stands for fear of missing out. Now, fear of missing out happens when the price is rallying and the people now are scared that they're going to miss out on this big rally, so they end up investing at the wrong time. They end up investing at the peak of a rally just to find out that the price has now dropped and now they were in a loss. That is what fear of missing out is. It is the fear of missing out on the move that is happening. So you end up investing at the wrong time and things go against you. Another term you'll come across is FUD. FUD stands for fear, uncertainty, and doubt. Now, FUD is basically what all the big players and the governments do to the market. They create fear, uncertainty, and doubt to us smaller investors. So they will bring out bad news when the price is high, so to scare us, so that the price will then drop. Once the price has dropped to a decent level where all these big players or governments are wanting to buy cryptocurrency, they will start to release good news, and therefore all of us smaller investors start to invest again, and they've also invested, which increases the price.
Alright, the next term that we're going to get to is fork. Now, I'm pretty sure you've already heard of the Bitcoin fork, the Ethereum fork. And basically what a fork is when one cryptocurrency splits and turns into two cryptocurrencies. Now, this could happen for a variety of different reasons. For example, owners of the company or the CEOs of the cryptocurrency company itself, they could have a disagreement and want to go their separate ways. There's a number of reasons this could happen. That's not very important. What's important is that you understand what a fork is when you hear people talking about it, and that's basically when one cryptocurrency splits and becomes two cryptocurrencies. So for example, we had a Bitcoin fork a little while ago, and Bitcoin became Bitcoin and Bitcoin Cash. That one cryptocurrency forked and split into two cryptocurrencies. Now, what happens during a fork is if you have one Bitcoin, for example, and Bitcoin forks into Bitcoin and Bitcoin Cash, you will still have your one Bitcoin, and then on top of it, you will be given an equal amount of the cryptocurrency that it forked into. So if you had one Bitcoin, when Bitcoin forked into Bitcoin and Bitcoin Cash, you then would have had one Bitcoin and one Bitcoin Cash. It's basically free money. The next term we're going to get into is HODL, and yes, it kind of looks like a weird misspelling of hold, and it kind of is, but what it actually stands for is hold on for dear life. So it is a way of saying hold. Now, this is very, very important. This is probably the most important of all the terms. This is one you will definitely hear, and this is definitely a rule that we follow. So HODL, hold on for dear life. Basically what it's saying is when you have invested, you can expect price to drop, you can expect it to rise, it's going to go all over the place for the next little while. We're holding this long term. We're not concerned with what is going to happen with price right now, over the next week or over the next 2 weeks. That doesn't matter to us. What matters is what price is going to do over years. So what we say is hold on for dear life. That is rule number one in crypto, is if you have invested, if your investment goes in the negative, say for example you invest in Bitcoin when Bitcoin's $10,000, your investment has now dropped and Bitcoin's only worth, let's say, $7,000, you do not want to sell at a loss. You want to hold that. Hold on for dear life. When you've made a smart investment for the future, you do not need to worry about what price is doing right now. If it drops, just hold. HODL, hold on for dear life. Okay, so that is very important. Make a note of that. The last term that we're going to be going over is volatility. Now, we briefly explained what volatility is earlier, but basically what it means, to give you a bit of a definition, is price is very uncertain. Price moves up and down at a very fast rate. That's what price volatility means. So for example, you could see a 20% increase as well as a 20% decrease in a matter of hours in this market. It is an extremely volatile market. Alright, now we're going to be getting into the blockchain. This is another term that you may or may not have heard. If you've heard about cryptocurrency, you more than likely have heard of the blockchain, but you most likely do not understand it, or you don't know what it is. So first things first, let me just go through what we're going to be explaining here. So the blockchain is actually the great technology that we're investing in. Cryptocurrency is one of the things that the blockchain can do. So the blockchain is the huge groundbreaking invention. Cryptocurrency is one of the things that the blockchain can do. So if I were to put this into an example, if you think of something like the internet, all right, the internet itself was the groundbreaking invention, but then you get all different tools or all different things that the internet can do. So the internet, using the internet, you can send or receive emails, for example. So the email isn't necessarily the groundbreaking invention. The internet is the groundbreaking invention. The email is one of the things that you can do using the internet. Okay, so it's pretty much the same thing here. The blockchain is the groundbreaking invention. It's the groundbreaking technology. However, cryptocurrency is one of the very many things that the blockchain can do. So when getting into the blockchain, it's very, very complicated. There's not too many people in the world that actually understand it properly. And the first thing we need to ask ourselves when we get into the blockchain discussion is, how is it important to us as cryptocurrency investors? Because that's essentially what we're doing here. We're investing in cryptocurrency. So as cryptocurrency investors, how is it important to us? How is the blockchain important to us? And the first and very most important thing that you need to know with regards to the blockchain is that as cryptocurrency investors, it is not important to us. We do not need to know how the blockchain works in order to use it. Okay? You don't need to know the science of it, just like you don't need to know the science of the internet. I mean, we know how to send emails, we know how to log on to our social accounts, but do we really understand the science of the internet? No, we don't. And is it necessary for us to understand the science of the internet in order to use those tools that it offers? No, we don't. And it's the same with the blockchain. We don't actually need to know about the blockchain. We don't need to know how to use the blockchain. We don't need to understand the blockchain as cryptocurrency investors. So we're going to give you a basic overview of what the blockchain is and why we believe it's a groundbreaking invention. But with that being said, if you take nothing from this slide, it's really not going to do any damage to you as a cryptocurrency investor. Okay, but let's get into it. Let's give you a basic understanding anyway. So when it comes to any invention, the first thing we need to ask ourselves is what issue does this invention solve, or what problem does it solve, or what gap does this invention fill? Okay, and when we look at previous inventions of the world, previous huge inventions that changed the world as we know it, it's easy to look back on those inventions in hindsight and go, okay, we can see what it did for the world. We can see that this was a great technology. We can see what good it has done. But when those things were invented, it wasn't very easy to look at it with foresight. It wasn't very easy to look into the future and go, I can see what this is going to do for us in the future. So in order for us to really understand why this is a great investment with cryptocurrency and the blockchain, we need to kind of look with foresight and look into the future and go, what issue does this solve and how could it change the world? So let's go into a little bit of a history lesson, and we can go over some of the big inventions that have happened in the world, what issues they solved or what gaps they filled. So in the 1400s, the printing press was invented, and that was one of the first big major inventions that completely changed the world. And what that printing press did was it was basically it's a very old printer. So you would take ink and it would press onto a piece of paper or a sheet of some sort or a plant or whatever it may be, and it would essentially take that ink and print it onto this paper. Okay, and what gap that filled was what I like to call the knowledge gap. So before the printing press was invented, knowledge would only be given to kings or people with power, and it would come to them on a stone, and it would be engraved, all this knowledge, and they would receive the knowledge from the gods or whatever it was. And those are the only people that were really entitled to knowledge. And basically the printing press solved that knowledge gap. It closed that knowledge gap. So with that invention, now everyone was able to receive knowledge. Everyone was able to receive, for example, the newspaper, things like that. So it solved the knowledge gap. Then in the 1800s, or the next biggest invention, that was the engine. Now, the engine solved the power gap, and it helped solve issues such as slavery. So before the engine, there were slaves. People would use slavery to get their work done, to build things, to manufacture things, and the engine closed that gap. It closed the power gap. So now we didn't need slaves. We had this thing that could manufacture for us. The next biggest invention came in the 1900s, and that invention was the internet. Now, this is the example I like the most because it's something that we can all relate to. So in the 1900s, the internet was created, and yeah, when it was created, people didn't really know what it did. People didn't understand it. They didn't see what it could do for the world. All it really was a bunch of computers, all different areas of the world, that could send and receive information. And people kind of looked at this and went, well, I don't really know what it does. What is this thing, this internet? What does it do? How can it make the world better? I mean, if we look at it now, we think back and we go, well, how could we live without the internet? I mean, life as we know it would come to a screeching halt if the internet had to be abolished. So yeah, if we look back, we can see what the internet's done for the world. We can see how it's changed things. We can see how it's moved us forward as a human race. But at the time, it was hard to look at it with foresight. In hindsight, though, we can see what it's done. And what the internet did was it closed the distance gap. So what it solved was, now I'm able to contact anyone from anywhere in the world instantly for very, very cheap. If you had to go back into the early 1900s and tell people that you could one day speak to them over a screen, try and describe a laptop screen, tell them you could speak to them via video for very, very cheap across the world, they would laugh at you. They'd say that's impossible. But if we look at it now, we think, well, how could we function without this thing? And this brings me to the 2000s and what I believe, or what we believe, is the next big invention that we should be looking at into the future, and that's the blockchain. So the first thing we need to do is we kind of need to look at it and go, well, what could it do for us? What gap could it close, and what issues could it solve? And basically what the blockchain does is it solves trust issues. It's going to change the way that we trust. Now, this is going to be a big time oversimplification of the blockchain, on how the blockchain works. It is a very complicated beast. It's not going to be easy to understand, and like I've said earlier, it's not actually necessary to understand, but I'll try my best to simplify it so that you can have a basic understanding of what makes the blockchain so great. So basically the blockchain is an updated version of a ledger. Now, if you don't know what a ledger is, you can just go into Google, type in what is a ledger. You'll see some information there, but basically a ledger is the way that we store financial information or financial transactions. So for example, if you were to buy a house, that house would have its own ledger, and it's basically it's a way of keeping track of all the financial changes, all the financial records of that house. So the ledger of a house would look something like this. The first entry of the ledger would be, for example, the year 2000, the house was built. Then the next entry would be the year 2005. There was structural damages to the house due to flooding, and then those had to be fixed, etc., etc. And you would have all these financial records of this property. Now, the problem with the ledger system that we use today is that we can't actually trust it, because it's very easy to tamper with, it's very easy to change, it's very easy to add new things in because of the way it's stored. Now, basically it would be stored either digitally on a computer or in a filing cabinet on file. Now, you can imagine how easy it is to tamper with something like that. If it's in a file especially, I mean, you could just remove pieces of paper, add pieces of paper in. You could really tamper with the ledgers that we use today, and no one would ever know. Now, what the blockchain is, it's an updated version of a ledger, and what ends up happening is that each financial entry, or each entry onto this new ledger system, is known as a block. So each entry would be a block, and what happens is when one entry is made, so for example, if a house were to be built and the ledger is stored on the blockchain, the first entry would be put in, and it would be house built the year 2000. Then what happens is an algorithm is formed, and a key pops out of that block. Alright, a key pops out of that block. Then the next entry comes in. Let's say in 2005, structural damage to the house due to flooding, and there had to be the house had to be fixed, had to be repaired. We'd have all the information about that, and that would be the second block. The key from the first block would go into that second block and create an entirely new key, essentially chaining those two block entries together. Hence, that's where the term blockchain comes in. Now, I know this is very confusing. I don't expect you to fully understand this, and it's alright if you don't, like I've said. So that's where the term blockchain comes from, and what makes that so great is it's very, very difficult to tamper with. So each block on the blockchain, each block entry will be stored in many, many different places. So if there's 5 block entries on that particular house's blockchain, all 5 of those entries are now linked together. In order to tamper with that, in order to tamper with any piece of information there, you would have to be able to access every single block. You'd have to be able to access every single key, which is almost impossible from a hacking perspective. So basically what that does is it solves the trust issue. Now, the blockchain and cryptocurrency is something that's extremely traceable. However, it's not very trackable. And what I mean by that is when things are happening on the blockchain, when financial transactions are taking place, for example, with cryptocurrency, you can see exactly where that cryptocurrency is going. You can see exactly where it's being sent from, exactly where it's being sent to. So it's extremely traceable. However, it's not very trackable, meaning it's completely anonymous. So there's no identity involved. You don't necessarily need to know who is sending or receiving money on the blockchain. So it's extremely traceable, just not very trackable. You can't track who it's coming from or who it's going to, but you can see exactly where it's going. And that basically would solve a trust issue. And especially here, for example, in South Africa, where we reside, it could solve a lot of problems. I mean, if we think of the tax situation that we have here in South Africa, we're paying tax, but we don't actually know where that tax money is going. We don't know if the government is using that tax money for the correct things. Therefore, we can't actually trust. We can't actually trust giving our money to these people, because we don't know if they're doing the right thing with it. Whereas with a blockchain and with cryptocurrency, we could trace that cryptocurrency that we have paid our tax with, and we can see exactly where it's going. We would know that it's going to the correct place. So that's how it would solve the trust issue.
Okay guys, this brings us to the next slide, and that is, what is cryptocurrency? And let's have a look at this now. Where did cryptocurrency come from? To this day, that is still a mystery. No one actually knows where it comes from. The name Satoshi Nakamoto was apparently the creator of Bitcoin. However, that name, Satoshi Nakamoto, doesn't actually exist. There's no one that lives by the name of that. So to this day, we still don't know where cryptocurrency comes from.
We don't really know why it was created either. All of that is still a bit of a mystery to this day.
And yeah, so then we'll get to cryptocurrency. Cryptocurrency is intangible, meaning that you cannot see it, you cannot touch it, you cannot smell it, you cannot withdraw it. It is completely digital. It is in the clouds.
Okay, next we get to what are the uses of cryptocurrency. And when we look at this, we need to kind of look at it in two different aspects of what are its current uses and what are its intended uses. So its intended uses are definitely for it to be a currency. It's something that we get paid in. It's something we make payments with, almost like normal fiat currency. And that's definitely its intention, is to be a currency. However, we kind of need to look at it right now and say, is this an asset or a currency? Because it's not really being treated like a currency at the moment. People aren't really working and getting paid in cryptocurrency. People aren't making payments with cryptocurrency. People right now are more just investing in it and making money off of it. So we have to ask ourselves the question, is this a currency or an asset? And right now, it definitely should be looked at as more of an asset. Like I said, in the future, perhaps its plan is to be a currency, but that can only happen when it gets stability. Right now, it lacks stability. Price is extremely volatile. So why would anyone want to accept payments in it? If you go for a job, if you get a job and they tell you, okay, they'll pay you 1 Bitcoin a month, you're not going to want to do that, because you know how unstable it is. Maybe this month that 1 Bitcoin can buy you a Lamborghini, and next month that 1 Bitcoin can only buy you a loaf of bread. It's very unstable. There's a lot of uncertainty around it. So it's definitely can't be treated as a currency. It should be treated as a speculative asset for investing and trading purposes. So what that means is we're looking to make investments into this now, knowing how volatile it is, but with the expectation that the value will increase in the future. So definitely right now, it should be treated as more of an asset for investing purposes and not necessarily as a currency. Other uses that we have for cryptocurrency are are payments, and it's used on the black market. So when it comes to payments, there are online stores that and even normal shops that accept cryptocurrency as a form of payment. Takealot.com, which is a South African website where you can make purchases online, they accept Bitcoin payments. There's a Pick and Pay, which is a local supermarket in South Africa. There's one in Cape Town that accepts Bitcoin as payment. So you can use it to make payments. However, right now we're kind of more looking at using it as an investment tool. And then obviously, as I said earlier, cryptocurrency is not very trackable. So you can trace it very easily. You can see where it's going. However, it's not very trackable. There's no identity involved. It's very anonymous. So it is widely used on the black market at the moment. People buying illegal materials, drugs, things of that nature, using it because it does have value, but there's no identity linked to it.
Okay, guys, cryptocurrency is decentralized, meaning it is not controlled by banks, governments, or institution. So basically meaning that there is no middleman when it comes to cryptocurrency.
It's completely peer-to-peer. If I want to send or receive money, I don't have to go through a middleman like a bank. For example, when you send money through the bank, you first of all have to ask the bank permission to send that money. Then the bank will either say yes, or they'll deny you that permission. And if they do then send it, it takes them some time to create the transaction and then send it through. And there's obviously a lot of problems with this system that we're using. There's fees involved, things of that nature as well. It takes long. But cryptocurrency is completely decentralized. There's no bank, there's no institution that you go through, so it's much quicker, and we don't have to ask for permission. If I want to send money across the world, I can do that instantly without having to go through a middleman. The next point is, how is more created? So we know with normal fiat currency that money is printed by the banks. So that's how more fiat currency is created. But how is more cryptocurrency created? So with most cryptocurrencies, there is a cap. There is a limit to how much there can be. For example, when it comes to Bitcoin, there can only ever be 21 million Bitcoins. Currently, there's around 17 million. But once it hits 21 million, it'll reach its market cap. There can never be more Bitcoins than 21 million. So we need to ask ourselves, if there's 17 million and there can be 21 million, how is more created? And that's basically through the process of mining. Now, we personally do not do mining, and this is not a course on mining, so we're not going to get into the nitty-gritty of what mining is and how to do it. But I'll give you a basic definition of what mining is. So when you mine cryptocurrency, what you're essentially doing is you're investing in computer hardware that is going to solve algorithms. It solves mathematical algorithms on the blockchain. And once this hardware device that you've purchased, once it has solved these algorithms, it then creates new cryptocurrency, and you get rewarded with some of that cryptocurrency. So it's almost a form of passive income. You make an investment once off, the computer does the work for you, the computer's processor does the work for you. It solves the algorithms, and more cryptocurrency is therefore created. And then you get rewarded on a daily basis with some of that cryptocurrency. So that's how more is created, but we won't get too deep into that because it's not very important for what we're teaching here. And then lastly, a big question that we get quite a lot is, what gives cryptocurrency its value? So you see something like Bitcoin and you go, okay, well, currently Bitcoin's sitting around $7,000 or whatever it may be. You go, well, what actually gives it that value? What makes Bitcoin, this digital thing that actually doesn't even exist, really? It's just digital. It's in the cloud. What gives it its value? What makes it so expensive? And why are people actually paying this amount of money for it? And basically it boils down to supply and demand. That's exactly what gives cryptocurrencies its value, is simply supply and demand. An example I like to use is, if I have 10 apples and I have one person that wants to buy an apple, but I desperately want to sell my 10 apples. If I want this one person to buy all 10 of my apples, I'm going to have to make my apples very cheap, because I have an oversupply, I have a lot of supply, and I have a very limited demand. So the demand for my apples is only from one person, and they only want one apple. So I've got a fairly low demand, and I've got a fairly high supply. Therefore, my apples are going to be very cheap. They're going to essentially be worthless. Whereas if I have one apple, and I have 10 people that each want to purchase an apple, I'm going to be able to sell that apple for very expensive, because whoever's willing to pay the most will get it. So in that example, I have a very limited supply, but a huge demand. So there's a lot of demand for what I have, but I've only got a limited supply. Therefore, the value will increase. And it's the same with cryptocurrency. So it works on supply and demand. So currently, everyone wants Bitcoin. Everyone wants to invest. And there's a limited supply. Like I said, there's currently only about 17 million Bitcoins, and there only ever will be 21 million. So you can imagine, when that 21 million cap gets hit, the value is going to increase drastically, because there is going to be then the limited supply has been met, and there will still be quite a large demand. So that's what gives it its value. It's completely peer-to-peer, so the people essentially decide on the value of cryptocurrency.
Okay, guys, we're going to be going through a very important website now. It's called the CoinMarketCap. I suggest you go on this website every day, as we do as well. On this website, you will be able to find all the different cryptocurrencies that exist, and it also gives you data and information about each cryptocurrency.
Alright guys, so like Ryan was saying, we're going to be going through a website, CoinMarketCap.com. This is a very important website. It's something I definitely recommend you should be looking at on a daily basis, if not a daily basis, at least regularly, a couple times a week. Personally, we go on this website every day. Now, what this website is it basically lists all of the cryptocurrencies that exist. So if we scroll down, we can see there are tons of different cryptocurrencies that you could invest in. See, this particularly goes up to number 100, and there are a lot of cryptocurrencies. Tons. There's many pages, and each page has 100 cryptocurrencies. So as you can see, the ranked tells you the name of each cryptocurrency. I'll get into what all of this means in a second, but it basically gives you the ranking. It gives you the name of the cryptocurrency, it gives you the market cap, the price, the volume for the past 24 hours, the current circulating supply, the change that has happened in the past 24 hours, and a small price graph that represents the past 7 days of price movement. Okay, so to explain what all of these mean, first of all, this is the name of the cryptocurrencies. So number 1 is Bitcoin, number 2 in the rankings is Ethereum, number 3 is Ripple, and I'll get to in a moment what gives it the ranking. But for now, let's just look individually at each cryptocurrency so you can have a better understanding of what all this information means, what you're seeing here. So let's go with Bitcoin, for example. So we'll finish off with market cap. I'm not going to start with market cap, because the market cap is what gives it its ranking. So we'll end off with that. But for now, we can see that the cryptocurrency we're talking about here is Bitcoin. If you go over to the right, you can see the current price of Bitcoin. And currently, 1 Bitcoin is worth $6,848. Now, a common misconception in this industry is that you need to be able to purchase at least one. So if you want to invest in Bitcoin, a lot of people think, okay, does that mean I have to buy a whole Bitcoin and spend $6,800? No, it does not mean that. You can invest as little as, I think it's something like 10 cents or something like that into Bitcoin. You can invest as much or as little as you want. You do not have to purchase an entire coin. Alright, so that is the price of 1 Bitcoin. If we move over slightly, we'll see volume and 24 hours. Now, this basically is telling us how much Bitcoin has been sent and received, how much Bitcoin has been transacted. That's the best way for me to say it. How much Bitcoin has been transacted in the past 24 hours in dollar value. And as you can see over here, there's been 4.1, almost $4.2 billion worth of Bitcoin transacted in just the past 24 hours. So that in one day, there's been more than $4 billion transacted in Bitcoin all over the world. The circulating supply, as you can see with all the circulating supplies, you get numbers and then you get 3 letters, sometimes more than 3 letters. If we scroll down here, this one has 5 letters, but it's usually 3. First of all, let me just get to what the letters mean. The letters are basically just your abbreviations. So, for example, if you were working with the US dollar, the United States dollar, the abbreviated would be USD. For South African Rand, it's ZAR, things like that. So Bitcoin is BTC, Ethereum is ETH, Ripple is XRP, etc., etc. Now, the circulating supply, what that means is this is the amount of Bitcoins that are currently in existence. So like I said earlier, the Bitcoin has been capped at 21 million. There can only ever be 21 million Bitcoins. There will never be more than that. And currently, there are only 16,970,887 Bitcoins in existence. So that is the current circulating supply. The biggest it will ever go is 21 million. So it's almost reached its max supply, but it's taken years to get to this point. Okay, the change in 24 hours, that is the percentage that price has either gone up or gone down in the past 24 hours. So as we can see, when it's green, it means that the price has gone up. So for the past 24 hours, Bitcoin has increased in value by 1.48%. Ethereum has increased in value by 4.97%, etc., etc. Here we can see Tron has gone down 0.54% in the past 24 hours, and the list goes on. Okay, and as you can see, like I said earlier, this is an extremely volatile market. We can see huge price swings to the upside and to the downside in very little time. Just for example, if you were to invest your money in the bank can give you about 7% return on investment in 1 year. If we look at something like EOS, we have gone up 13% in just 24 hours. The same can be said for losses. It can happen that it goes down a huge percent in 24 hours. Here, Ontology has gone up 16.9% in 24 hours. See if we can find some bigger ones. We may not. Here's one. Golem has gone up 19.51% in the past 24 hours. That is a 20% gain in 24 hours. That is almost unheard of in investing. So that's why we think this market is so special. There's so much room to make a lot of money. Here's another one, 28.60% gain in the past 24 hours. And the list goes on. There are days where you'll see the market is red, where the market is falling. You can see huge drops as well in price. You can see in the negative 20%, in the negative 30%, 50%. It can happen. So that's what those all mean. And then the price graph is basically just, it's a visual representation of what price has done for the past 7 days. And now lastly, this brings me to the market cap. And this is what gives these cryptocurrencies their ranking. So Bitcoin is number 1 because, as you can see, it has got the largest market cap. Ethereum is number 2 because, as you can see, it's got the second largest market cap. Ripple has the third largest. Bitcoin Cash has the fourth largest, etc., etc., etc. The market caps get smaller and smaller as you go down. Okay. So what gives us this market cap, and what does the market cap actually mean? So a market cap is basically the valuation of the particular crypto. So if we look at something like Bitcoin, we can see that the current market cap is $116 billion, 230 million, 41,177. That is a huge market cap. So that is basically what all of the Bitcoins combined are worth. So how you get the market cap is you would take your circulating supply, which is the amount of Bitcoins that exist, and you would times it by the current price. So all of these Bitcoins at that price are worth that much. Bitcoin has the biggest valuation in terms of market cap. That's why it's number one, and the list goes on. But if we have a look at this, we can see that Bitcoin is $6,800. Ethereum is 450, and then we get to something like, for example, Bitcoin Cash is 651, but Ripple, which is actually ranked higher on the market cap, is only 50 cents, 49 cents per coin. So people would say, why is Bitcoin Cash ranked number 4 if they're worth $651 each, and Ripple is actually ranked number 3 when they're only worth 49 cents each? And that comes down to then the circulating supply. Look how many more Ripples there are than Bitcoin Cash, for example. There is more than 39 billion Ripple that exist currently. Each trading currently at 49 cents. So if you times that by that, it gives you that market cap, and hence that is why Ripple is number 3. Okay, so that's basically on the front page of the CoinMarketCap. That's the first thing you'll see when you log on, is the list of all of these cryptocurrencies and a little bit of information about each of them, as well as their current ranking. Okay, now if you wanted to find out more information on each individual cryptocurrency, you can just click on it. So if you want to find out a little bit more information, you want to dig a little bit deeper into Ripple, you would then click on Ripple, and this would come up, and you would then be able to see more information about Ripple, and you could click on these links. You could go to the Ripple website if you wanted, different chats and message boards where you can see people discussing the cryptocurrency and what it has to offer. If you scroll a little bit down, you'll also get a price chart. What's important to look at is the different colors. So we, for example, look at the green. We don't worry too much about the orange or anything like that. We look at the green line because that is the price in US dollars. And as you can see, a year ago, let's go to around the 11th of April, because today's date is the 11th of April. If we go to the 11th, or close to the 11th at least, there, the 10th of April, 12th of April, one Ripple was not even worth 4 cents, not even worth 5 cents. It was 3 cents for one crypto, for one Ripple. The value in 1 year has gone from 3 cents, and it is currently at almost 50 cents. That is a huge gain. And if we see over here, we've actually had quite a large fall, because at one point, at around there, the 4th of Jan, very, very beginning of Jan, the price of one Ripple was $3.65. So it's actually had a huge fall, and now is actually a great time to be investing. You don't want to be investing when price is high. You want to wait for the drops so you can invest low. And the same happened here, where price shot up over there. It went up to around 41 cents. Let's call it 40 cents. And then price dropped again, and price, look at that, it dropped 16 cents. 17 cents. It dropped quite low, giving you a better investment opportunity. People that invested at the top over here, they had FOMO. Remember, we went over earlier what FOMO is. It's the fear of missing out. Basically, price rallied. Price was very bullish. It rallied up. People got FOMO, the fear of missing out. They thought, oh wow, I don't want to miss out on this big move that's happening. They jumped in. Let's say they invested there at 41 cents. Next minute, price fell. Price fell to lows of around 15 cents. As you can see there, 15 cents. Now, the smart investments would have been made at this price. You would have been investing here where price is nice and low. We've had a proper drop, and now look what happened after that. Price shot up again. We've had a huge drop again. Now is when the smart investments are being made. I'm not going to go too much into everything else about this website. Nothing else is really that important. If you wanted to see where you can buy Ripple, you would just click here, for example, on markets, and there you can see where you can buy Ripple. So if you want to buy Ripple using US dollar. You can see, okay, here on the Bitfinex exchange, you could buy Ripple with US dollar XRP to USD. If you want to buy it using Bitcoin, you could see, for example, okay, here on Binance, we can buy Ripple using Bitcoin. So you can see the different places where you can buy the cryptos as well. So that's basically the CoinMarketCap. What we tend to focus on is this front page. When we're doing research on specific cryptocurrencies, we will then come to this page, say we've heard a lot of great things about, let's go for Monero. We would then go to Monero, for example. We would come here and we would go into their website. And then on their website, you can get all information about Monero. Look at that. Why is Monero different? It's secure, it's private, it's untraceable. Remember, I was speaking to you about how it's very anonymous. Cryptocurrency is quite anonymous. So you could read a lot about different cryptocurrencies. You could access their websites and things like that. So personally, when we come onto CoinMarketCap, we look at this front page. What we look at on a daily basis, the reason we go on it regularly is because we like to get an idea of what the market is doing. Is the market going up? Is the market falling? When you're involved in cryptos, you're going to want to know what's going on a regular basis. You're going to want to know what's happening with your investments. So today we know Bitcoin's trading around the high 6,000s. Tomorrow when we come on, if we see straight away that it's in the mid 7,000s, we know, wow, there's been a great increase in price. We're kept up to date on what's happening. So that is exactly what we use this website for.
Okay guys, we're going to be getting into what is an ICO now. First of all, an ICO stands for Initial Coin Offering. An ICO is basically a startup cryptocurrency company which is seeking investments. So it's basically a source of crowdfunding. So you will basically invest in their project, and in return you receive some of their tokens. However, an ICO can be very risky to invest in, as a lot of ICOs are scams, but we'll get into that a bit later. If you were wanting to invest in an ICO, the only way you could do that is obviously by going onto their website and purchasing your coins through there. How to choose which ICOs to go for. Now, the first thing you need to do is obviously do your research. Make sure you're comfortable in what you're investing in. And another thing is to also follow the hype. Look at what people are talking about. What are people raving about?
And guys, what's also important to note is that as it says in the title, ICO, Initial Coin Offering, when you're making this investment into the project and they're giving you this cryptocurrency they've created in exchange for your investment, the reason it's called Initial Coin Offering is because they're actually giving you the initial coins, the initial tokens, before they're even listed on big exchanges. So what it's actually doing is it's allowing you the opportunity to make an investment in something that hasn't been listed yet at a very, very cheap price, and potentially make a huge profit gain in the near future. Many cryptocurrencies started out as ICOs, so they did do a form of crowdfunding. People invested, received the tokens at a very cheap price, and then held onto the tokens throughout the years and saw massive gains.
Okay, guys. So if you are looking at which ICOs to go for, I recommend that you do your research. You have to do your research when it comes to any investments you're willing to make. Because this is your hard-earned money that you are investing. So please do your research and make sure that you're willing to invest your money into this.
Yeah, make sure that there's a lot of hype around the particular ICO as well. Hype definitely is our secret weapon when it comes to cryptocurrencies. You'll hear a lot of people say to you, don't believe the hype, don't follow the hype, do your own research. And we feel that when it comes to cryptocurrencies and RCOs, hype is all part of the research. And I feel that hype is probably the biggest part of the research because, like we stated earlier, what gives a cryptocurrency its value? Supply and demand. So obviously when there's a limited supply and high demand for something, the price will increase. Therefore, if there's a lot of hype around a particular RCO or a lot of hype around a very particular cryptocurrency, it'll obviously increase the demand, therefore increasing the price. So we always say definitely believe the hype. There's a lot of RCOs that you can invest in. There's actually a website called Coin. I'll have to think of it now. It's called CoinSchedule. Sorry about that. It's called CoinSchedule, and that website lists for you all the different RCOs that you can currently participate in. Now, there's a lot of them, and a lot of them you won't even really hear of. Those tend to be the ones that might not work out. However, there's often quite a lot of hype around some RCOs, and those are definitely the ones that you want to be interested in because you know a lot of people are interested in them. There's obviously a huge demand for it if there's a lot of hype. Therefore, the price should increase and it should work out. There is a particular RCO that we are currently looking at investing in. Depending on when you're watching this video, if you're very new to or if you're catching this at this early stage, currently it's the 11th of April 2018. The RCO that we are currently looking at investing in is called Bunny Token. We are definitely going to be making an investment into Bunny Token. We are in no way financial advisors. We are not telling you to make an investment into Bunny Token. We are just letting you know that we are personally going to be investing in it. And it's definitely one to look at because the hype is most definitely there. It's most definitely a very targeted cryptocurrency. So it could potentially be a very good RCO to invest in. But like we said, RCOs can be very risky. And the reason is because anyone can just slap together a website, claim they've got this cryptocurrency, ask for investments, and claim that they will send you their token in exchange for your investment. However, when you've sent your money and they don't send you anything, there's absolutely nothing you can do about it. So as with anything, as with anything money related, there are a lot of scams. So you just got to be very careful for those scams, and that's why we say believe the hype. When there's a lot of hype around a particular RCO or even a particular cryptocurrency for that matter, we feel it makes it that much more legit to invest in.
Okay, let's have a look at storage now. Public and private keys, we will get to that in a bit. Let's first get to the different ways you can store your cryptocurrency.
First thing we want to start off by saying is that just like normal money, you've got different ways of storing it, and there's advantages and disadvantages to each way. So for example, with your normal money, you can keep it in your wallet, that's in your pocket. You can keep it in a safe, you can keep it in a bank, and each ways will have their pros and cons. So if you were to keep your money in your wallet, in your pocket, obviously the pro is that it's very easily and quickly accessible. However, the con is that it is probably the most unsafe way to store your money because someone could easily just take it out of your pocket and access it. If you're storing your money in a bank and you've got a debit card, it's probably the advantage is that it's a bit more difficult to steal that money. However, the disadvantage of that is that it might take you a little bit longer to actually access that money. So when it comes to cryptocurrencies, there are many different ways to store your crypto. There's many places that you can keep your crypto, and each way kind of has their advantages and disadvantages.
Okay, so there's three main ways that you can store your cryptocurrency. Okay, the first kind of way you can store your cryptocurrency would be storing your crypto on an exchange. Now, an exchange is where you can buy and sell cryptocurrencies, and you can obviously store them on there. Then you also get a local wallet, which is a program that you download onto your computer, and you'd be able to store your crypto on there. The third way to store your cryptocurrency would be storing it on a hardware wallet. And a hardware wallet is a USB-like device which you can purchase from an online shop, for example, takealot.com. And also, in our opinion, a hardware wallet is definitely the safest way to go when it comes to storing your cryptocurrency.
So, like I said earlier, when it comes to normal money and storing it, you can keep it in your wallet, in the safe, in the bank, and each way kind of has its own set of disadvantages and advantages. And the same goes for storing your cryptocurrency. So, let me first get into kind of what is a public and private key. That way we can better understand the benefits and disadvantages of all the different ways of storing. So a public key is obviously, as the name suggests, it's something that you can give to the public. It's something that the public would have access to. So the way I like to think of a public key is when you have a bank account and you're storing money in your bank, you have an account number. Now, if you want anyone to send you money to that bank account, you would then give them that account number along with other information, but most importantly, you would have to give them your account number that they're going to be sending the money to. In cryptocurrency, technically your account number is your public key. So it's a sequence of letters and numbers, a random sequence of letters and numbers that you would give to a particular person so that they can send you cryptocurrency. Think of your public key almost as your account address where people would send you cryptocurrency. Just like normal money, just like storing your money in the bank. Okay? A private key is basically the list of letters or numbers that allows you to access your cryptocurrency. So if you wanted to send cryptocurrencies, for example, you would have to have access to your private key, so your passwords and things like that. Alright, so we have to then ask ourselves, with the different types of storage, who owns my private keys? So when it comes to an exchange, between an exchange, a local wallet, and a hardware wallet, we'd definitely say an exchange is probably the least safe way to store your crypto. And the reason we say that is because you actually don't own your private keys on an exchange. So an exchange is where you're purchasing cryptocurrency. So you would, for example, send money to an exchange and then you would purchase something like Bitcoin, for example, using that money. That would be on the exchange because you're exchanging one type of currency for another. Now, on an exchange, the exchange itself actually owns your private keys. All that they do is allow you access to your own private keys. So you don't actually own your private keys. The exchange owns your private keys, and they allow you access to your private keys. Now, the problem with that is, what if someone hacks that particular exchange, which has happened with some exchanges in the past? If someone were to hack the exchange that you're part of, where you're storing your cryptocurrency, they would then essentially have access to everyone's private keys, including yours, which means they could then send your cryptocurrency to wherever they wanted, and no one would be able to track who this person is that hacked the exchange and stole the cryptocurrency, because like I've said, cryptocurrency it's anonymous. It's not very trackable. So that's the danger of storing your cryptocurrency on an exchange, is that you do not actually own your private keys, which means that the exchange itself could actually just take your crypto if they wanted. Next is a local wallet. Now, like Ryan said, a local wallet is a wallet. It's a piece of software that you download onto a particular device, like your computer, and that wallet you can only access through the device that it's loaded on. So, for example, if you had to open up a bank account and you've got online banking, you can access that bank account from any device you wanted. Okay, that's like an exchange. You can access your exchange if you're storing your crypto on an exchange. You can access it from any device. When it comes to a local wallet, you can only access that wallet on the device that it is locally stored on. That's why it's called a local wallet. Now we need to ask ourselves the question when it comes to a local wallet: who owns my private keys? Now, when it comes to a local wallet, you do own your own private keys. Alright, so that makes it a lot safer than an exchange already. However, there is still a danger involved, and the danger comes with your device itself. Now, because you can only access, you have access to your own private keys, you own your own private keys, but they are stored on your device. So if someone were to hack your device, or if your device were to get a virus or anything like that, it could put your cryptocurrencies on your local wallet at risk. That's the danger of the local wallet. Then lastly, you get the hardware wallet, and you need to ask yourself again, who owns my private keys? On a hardware wallet, you own your own private keys, and we believe it's the safest option because, first of all, yes, you own your own private keys, and your cryptocurrency is stored on a USB device offline. So a hacker couldn't, for example, hack into this device and steal your cryptocurrency because it's not actually stored online, it is stored offline on the USB device. So the only way anyone could steal your cryptocurrency is, first of all, if they steal your hardware wallet device, your USB-like device, and then they would still need to have access to your passwords, your PIN codes, and things like that if they wanted to actually access your cryptocurrency and steal it from you. So those are the three different ways that we look at storing our cryptocurrency. Obviously, a hardware wallet, there is a cost involved. An exchange is free to register with. A local wallet is free to download onto your device. A hardware wallet, there is a cost involved. In dollars, we're looking at about around $120 for one. In South Africa currently, if you purchase off takealot.com, they're around 2,000 Rand for example, the one you can see here on the slide, that's a ledger. Those are around 2,000 Rand. So there is a small upfront investment with a hardware wallet, but what we always say, if you're storing for the long term, 2,000 Rand or 120 odd dollars isn't a lot of money. Isn't a lot of money to pay to potentially secure millions of rands worth of cryptocurrency. Alright, so another question that we tend to get quite a lot is the question of tax. Now, we are South African, so we are going to relate this to where we reside. So for example, with tax in South Africa, we need to first decide what laws and regulations govern cryptocurrency in South Africa, and currently there are no laws or regulations that govern cryptocurrency in South Africa at the time of this film, at the time of this that we're filming this course. It's around the beginning of April 2018. So currently there are no laws or regulations that govern cryptocurrency in South Africa, but we can anticipate that there will eventually be some sort of tax implication on cryptocurrency traders or cryptocurrency investors. Like I've said, currently there's nothing, but in the future they will find a way. They will eventually find a way to tax us. So all we can really do is try and look into the future and decide how will they tax us? How are they going to tax us on this? And the most likely option is capital gains tax. Now, remember earlier I said we need to decide what is cryptocurrency right now. Is it a currency or is it an asset? And I said that we should be treating cryptocurrency as an asset for investing and trading purposes. So it's a speculative asset, and how investment assets are taxed in South Africa is through capital gains tax. So for an individual person, that's 16.4% tax. So for example, if you were to invest 10,000 Rand into cryptocurrency, and that investment had to grow to 110,000 Rand, that means you have seen 100,000 Rand of profit. So you've invested 10,000, it's turned into 110,000. There's 100,000 Rand profits. You would then get taxed, capital gains tax, which is 16.4% on that capital gain. So on the 100,000 Rand profit, not necessarily on the 10,000 Rand you invested. And you would get taxed 16.4% on that. So if you were to have a 100,000 Rand profit, you would get taxed 16.4% of that, which is 16,400 Rand. Now, the only way they'd be able to do this is if they were to track that you had sent out, or you had sent, let's say, 10,000 Rand to a particular account that is meant for cryptocurrencies, or an exchange for cryptocurrencies. And then when you bring money back into the accounts, they will then tax you on that profit.
Okay, guys, last but not least, let's talk a little bit about scams. Number one, RCOs. Not all RCOs are scams, but a good 9 out of 10 are. As the people looking for this crowdfunding for their project, they don't even have any interest on making any moves with their project. They just interested in getting people's money, and then at the end of the day, they just steal everyone's money.
It's very easy to create an RCO scam. All you would really need to do is create a website claiming that you have a project, claiming that you have all these ideas, putting an address there for people to send money to, and claiming that you will send them tokens in exchange for their investment. Once the person sends the money through, they go running with the money. So RCO is definitely a great place to run a scam, because it's very easy. All you really need to do is make claims and ask people to invest, and once they've done it, no one can really track who stole the money.
However, not all RCOs are scams, though. That's why we recommend, obviously, do your research and follow the hype, like we've said previously. Another scam opportunity out there for people.
It's robots. Anything claiming to trade for you on a regular basis and make money for you, usually that is very untrue. What we like to always say is if it sounds too good to be true, it usually is. And anything that says, make this one-time investment and we'll pay you constantly, you'll just get rich off of this robot. I mean, come now, if it was really that easy, surely everyone would have invested in a robot by now and everyone would be millionaires. So any algorithm or system claiming to trade for you or make money for you in cryptocurrency, that is most likely a scam. Rather do the research, do the work yourself, make the investments yourself. Don't rely on some algorithm or some robot to do it for you, because 9 times out of 10 those are also scams. I'm yet to come across a legitimate robot that trades for you.
And another scam out there would be anything that's offering you passive income on the daily. So, for example, BitConnect. BitConnect is actually a cryptocurrency, and they had
a system in play where you would make investments, and they would claim to pay you roughly, on average, not an exact amount, but on average about 1% return on investment per day. Now, there are a few of these opportunities out there where they say make a once-off investment and they'll pay you passive income on a daily basis. They are usually scams as well. This, obviously, as you can see there in brackets, not mining. As we spoke earlier about mining, that's when you invest in a computer processor to solve algorithms on the blockchain and create new cryptocurrency, and therefore you are rewarded in cryptocurrency, that is a legitimate passive income source in crypto. But any sort of platform online that claims that you must make an investment and they'll pay you a return on investment on a daily basis, that is definitely something not to be trusted. The next thing that I'm going to go over is pump and dumps. That is a huge scam that's going on in the industry. It's fooling a lot of people out there, and you will probably be on Telegram by now if you're watching this, because we have our student group on Telegram. Now on Telegram there are a lot of pump and dump channels. So what a pump and dump channel it's when this channel will offer you an opportunity to make quick easy money. Now, as we know, in any industry there is no such thing as quick and easy money. Anything that says here, invest here, put money here, do this quick and easy, you'll make a lot of money within minutes, within seconds, it is a lie, it's a scam. Okay, so pump and dumps fall under that category. What a pump and dump is it's when a group of people, let's say it might even be one person, creates a group, gets a large following on that group, and then what they do is they'll tell everyone in the group that in the next hour or whatever it may be, they'll state a specific time and they'll say at this time we are going to release the name of the coin that we must all buy, and if we all buy this coin at once at the same time, the value of it will increase drastically because it's showing a high demand for that cryptocurrency. A lot of people are buying. So the value of it will increase drastically. So you're buying in the bottom, it's going to increase 20, 30, 40%, and then you're all going to sell at the very top and we're all going to make money. And what they end up doing is they already know beforehand exactly which coin name they're gonna release. So they'll say to you, okay, we're all gonna be pumping whatever coin, for example, glass coin. I don't know if there's such thing as a glass coin, but let me just, for the sake of the example, I'm gonna make one up. So they know, okay, we're gonna be pumping glass coin. So what they do is they invest, they make their investments. Then when they release the coin name, everyone then buys at the same time. You'll have thousands of people racing to try and buy that coin all at the same time because they think they're going to buy it at the bottom, the price is going to shoot up, and they're going to sell at the top. What ends up happening is the price gets shot up so quickly. Yes, some people end up making money, but it's the people that have won the race of buying it first before anyone else. But what ends up happening basically is that the only ones really making consistent money on it are the people that run the group and have invested before they've even released the coin name. Everyone else that buys when they release the coin name usually will end up buying right at the top of the spike, and they'll actually end up losing money. So pump and dumps, definitely avoid that. And then lastly, this is kind of an umbrella thing for scams. And it falls over a lot of categories, and that's anything that makes a guarantee. When it comes to cryptocurrency, there are no guarantees. When it comes to any form of investing, for that matter, there are no guarantees. No one can guarantee you a return on investment. No one can guarantee you a profit. So anything that guarantees you that they will pay you a particular return on investment however often, or they guarantee you that the value will increase this much, or if they're making any sort of a guarantee that makes their investment decision a very wise one, I would stay away from it, because you simply cannot make guarantees in this industry.
Okay, guys, so now we have gone through all the crypto theory, we are now going to be getting into some Bitcoin practical use. We're going to be showing you how to start investing in cryptocurrency.
Okay, so now we're going to be getting into how we can actually buy cryptocurrency. How do we take money, fiat money from our bank accounts, and actually purchase some cryptocurrency with that? So there's 2 steps to this entire process. This using fiat money, that is the first step, and there's 2 ways to complete that step. And once that is done, this is the second step once you have done this first step. Okay, so just to give a basic explanation, when you when you do the first step, you want to take your fiat money, like your South African rands or US dollars, whatever you're using, and you want to purchase cryptocurrency with it. That's the first step. Now, usually the way we do that is you purchase Bitcoin. Okay, Bitcoin is usually the first cryptocurrency you'll invest in before investing in others. So there's two ways to do that. Now, you can do it via international wire transfer through an exchange like Kraken, for example, or you could do it via local deposit through an exchange like Luno. Now, the way we personally use and the way we are going to teach you is through local deposits on Luno. Okay, Luno is the exchange we're going to be using. The reason we do it this way is because it's much faster and much easier to do. International wire transfer, we're not even going to be getting into that. It's a longer, bit more complicated process. So we're going to be showing you how to do a local deposit into a Luno account and then purchasing cryptocurrency from there. The next step after that, once you've done this and you actually now have cryptocurrency, now the second step would be to buy other cryptocurrencies using the Bitcoin that you own. Alright, so step number one, take your fiat currency out of your bank accounts, put it into cryptocurrency. Step number two, take that cryptocurrency that you've purchased, send it to another exchange, alright, an exchange that offers more cryptocurrencies, and then you purchase cryptocurrency using cryptocurrency. So we're going to be showing you how to do that right now.
Okay, guys, this is the first step when it comes to investing in cryptocurrency. We're going to show you how to open up a Luno account, how to deposit South African rands into your Luno account, and purchase Bitcoin with it.
Alright, guys, so obviously the first step to purchasing cryptocurrencies, you're going to have to get registered on an exchange where they sell cryptocurrency. So the first step we're going to take is signing up to an exchange called Luno. This is where we purchase our Bitcoin from. You can purchase Bitcoin or Ethereum on Luno, but we just use it to purchase Bitcoin. And then from there we send our Bitcoin to another exchange where we can purchase other cryptocurrencies. Because like I said, Luno only has Bitcoin and Ethereum. However, this is the way we like to get into the market because this is the local exchange. It's easier to take money from your bank account, send it here, and then purchase cryptocurrency. So I'm going to require that you sign up to Luno. It's www.luno.com. Obviously, I've already got my own Luno account, so I'm going to be creating an account for the purpose of this example, and I'm going to be creating an account for someone else. So let's go sign up. You're then going to put in the email address that you want to use. Okay, you're going to choose a password. You're going to say that you're not a robot. Please, when you're creating a password, read this. Your password must be at least 8 characters, must contain numbers, lowercase and uppercase letters. That's just for safety reasons. You don't want people being able to copy your password. And then you're going to say sign up. Okay, then what you're going to do is you're going to go confirm the email. So I'm going to do that right now. Okay, welcome to Luno. Please confirm your email address by clicking the button below. You're going to say confirm email address. We can go out of these now. Now you're on Luno. You can say continue. It takes you to your Luno. So firstly, it says welcome to your Luno wallet. Luno keeps your Bitcoin safe while making it easy to use. We're excited to have you on board. Let's go. Okay, so this is your front page of Luno. Alright, you don't need to worry about all of this. It's just there's articles and things of that nature. Now you need to confirm a few things before you can get started. It says here, let's confirm your info. Before you can buy Bitcoin, please confirm your mobile number and personal information. So you'll say get started there. Don't worry about this. Next. You're going to put in your phone number. You're going to go next, and then it's going to ask you some personal information. I'm going to stop the video here because I don't want to give away all this person's personal info. And then I'll pick up on the video once I've done that. Alright guys, so we've completed that process. The last screen that you saw me on was where it was asking for a cell phone number. So you would have added in your cell phone number, click next. The next page, all you need to do is fill in some personal information, your name, your ID number, things like that. Once that is done, you'll be brought back to this first page, and as you can see over here, it says congratulations, you have now been upgraded to level 1. You can now deposit money into your Luno wallet and buy Bitcoin. The following limits apply to level 1. Now this is important. So once you put in that information, your name, your ID number, things like that, you will only be on level 1. So what that means is you can only deposit over all time. You can only deposit up to 15,000 Rand, South African Rand, and you can only withdraw up to 15,000 Rand. Now that does us no good even if you do not plan on putting in as much as 15,000 Rand. For all you know, you put in 1,000 Rand, that investment could grow to well over 15,000 Rand. And then when you want to cash out, unfortunately, you're only on level 1 and you can only withdraw 15,000 Rand. So we're going to need to upgrade. Now, personally, we have upgraded to level 2 on my personal account. And we recommend you do the same because the limits are not nearly as low as this. So in order to do that, you're going to click up here. You're then going to go, click up here. Okay, it took us right there, and you click settings. Once you're here, under settings, it says verification, level 1 verified. You're going to click upgrade. Now, if you want to upgrade, which you definitely will, all you need to do is upload a photocopy of your ID. Okay, so we're going to do that. Once we've done that, it takes up to 2 business days, and then we should be upgraded to level 2, which has much bigger limits.
Okay, so now that we have opened up a Luno account, let's get into how do we buy our first cryptocurrency. First of all, we have to deposit fiat currency into our Luno account, which in our case would be South African Rands. From there, we'll show you how to buy Bitcoin or Ethereum on Luno, and we will also show you a way on how to avoid fees when buying Bitcoin or Ethereum.
Alright guys, so you've signed up to Luno, which is the first exchange that we've had you sign up to. Now the first step in purchasing cryptocurrency is to do the local deposit into Luno. So you want to take your South African Rands in our case, and you want to actually deposit it into your Luno account so that you can then purchase cryptocurrency with it. So this is the very first step in investing, actually physically investing money into cryptocurrency. So what you would do is you'd sign on to Luno, and as you can see, I've already got some money in my Luno. I've been using this Luno for a little while, so I've got some leftover cash in it. If I click through, you can see I've got some Ethereum and some South African Rands, and so it's not a lot, but it's because I've just been using this account and there's some left over. But in your case, it'll all be zeros. It'll say you have nothing in this account. So the first step would be to click on these 3 lines over here, your menu, and then you're going to go to wallets. Once you're at wallets, for me it shows Bitcoin wallet, Ethereum wallet, and ZAR wallet. For you, it may just show one of these. It may just show it's either ZAR wallet or Bitcoin wallet, and then it'll give you the option to add wallets like this. And if you don't have all 3 of these wallets here, first step for you would be to say add wallet, and then just follow the steps that come up on the screen. to add your Ethereum wallet and your ZAR wallet and your Bitcoin wallet, whichever ones you need to add. But for me, they're all here already. I've already added them all. So the first step to depositing South African rands into your account would be to go here. You are then going to say deposit under the ZAR wallet. You are then going to pick your bank. All right. Now, for me personally, I bank with FNB, so that's the selection I'm going to make. If you bank with another bank, just click bank transfer with another bank and then select which bank you're going to be using. But in my case, I'm going to be using FNB. I'm going to be sending 5,000 Rand. So I've selected the amount, 5,000 ZAR, which is South African Rand. I'm going to say next. Alright, then the next step for me would be I have to now go onto my internet banking. If you do not have internet banking, you can always go into the bank and ask them to EFT the specified amounts to these specific accounts details, and they'll happily do that for you. However, for me, I'm with internet banking, so I'm just going to send this payment through. And please, when you're doing this, remember to make sure everything is correct. You don't want to run into any trouble, so make sure you use this as a reference. The recipient name is Luno. This is the bank, their account number, their branch code. It's a check account. They've stated the reference here again. It's the same reference as this one. And then they've said the amount that you have decided that you're going to put in. Now, in my case, it's 5,000 Rand. In your case, it may be a different amount. Once you have completed all of this, you are going to click I've made the deposit. So I'm just going to put this on pause real quick. I'm going to go onto my internet banking. I'm going to send it through, and then I'll show you the next step from there. Alright guys, so I have made that deposit on my internet banking. So I'm just going to click here and say I've made the deposit. You'll get a message awaiting deposit. Don't forget to make that deposit. When you receive your deposit, it will be added to your Luno wallet. Done. Alright, now usually it does take some time to send. Good news, you've received your deposit. It might have even come through already. It does sometimes come through very quick. Okay, as you can see, this has already come through. That was lightning fast. I literally just sent the payment about 5 seconds ago. This is about the fastest it's ever come through for me. Usually it doesn't happen this quickly. So now I'm going to be going on to the next step. Alright guys, so now that we have completed the first step, which is actually funding your Luno account with South African Rands, the next step would be to actually then purchase cryptocurrency. Now if we click on here, you'll see that I have the South African Rands in the account right here, ZAR 5,000. You can do the same by going to wallets. You can see all of your balances. So for you, you would have money in your ZAR wallet, but this and this, your ETH wallet and your BTC wallet, which is Bitcoin and Ethereum, those will be empty. There will be no balance. It'll be zero for you. Okay, so don't let this confuse you. Alright, so the first step after you've taken money and you've put it into your Luno account under the ZAR wallet would be now to buy cryptocurrency. And for the sake of this example, we're going to be purchasing Bitcoin today. Bitcoin is what we recommend purchasing first, because once you have Bitcoin, you can purchase just about any other cryptocurrency there is using that Bitcoin. But we'll get more into that later. So first things first, a lot of people make the mistake of buying Bitcoin on this front page by just going buy, or clicking more and saying buy. They make that mistake. Now the way you would do that is obviously you'd have zero here, you would have however much here, you would then go buy because you want to buy some Bitcoin. You buy Bitcoin, you're going to go with ZAR, you're going to say the amount you want to buy. So in our case, we want the 5,000 Rands worth. So in this case, you could just click there, it would fill it out and you'd say next. Now it's very easy to do it that way, however that isn't the way we recommend you do it, and I'll explain why now. So there's two different ways of placing an order to purchase Bitcoin. So that's exactly what you're doing. When you're purchasing this Bitcoin using South African Rands, you're placing a buy order. You're placing an order on Bitcoin. Okay, now you get there's two different ways to place that order. And basically though you can place an order as a maker and you can place an order as a taker. Now, in the example that I've just shown you here, where you simply come to the main screen and you say buy, you say how much or what you want to buy and how much you want to buy. If you do it using this method, you're what is known as a taker. Now, you do not want to be a taker because takers get charged fees. So if you buy Bitcoin using that method, you are going to be charged some fees, and they aren't small either. I can think of an example. We had a lady send through roughly 30,000 Rand. And what happened was that 30,000 Rand, by the time she had taken it from Rands to Bitcoin and sent it and done all those things, it actually ended up only being worth, it was only 26,000 Rands worth of Bitcoin. And that was because of all the fees charged through doing things like that. So that is if you're a taker. So you want to be a maker because makers don't get charged any fees when buying into cryptocurrency. So if you want to be a maker, you're going to have to go over here and you're going to have to come down to exchange. This is where you are going to be doing all of your buying and selling of cryptocurrency. So if you were to buy Bitcoin with South African Rands, you are going to come here to the exchange. If you wanted to sell Bitcoin for South African Rands, you would do the same. You would come here to exchange. Now, if you do it using the exchange, then you are a maker and you don't get charged fees. So you are actually creating the order. You are making the whole order. I'm going to show you how to do that. But you are basically going to be creating the order. Therefore, you don't get charged fees. When you do it the other way, when you come here and you say buy, you are the taker because you are doing an instant buy-in, and it will take one of these makers' orders. You see, all of these are orders here. Don't worry about that right now. We'll get into that with a more advanced technique that we're teaching later on. But basically, yes, a maker is someone who creates the order. A taker is someone who didn't create an order. They've just taken an order that a maker has created. So the takers get charged the fees, the makers don't. You want to be a maker. So in order to be a maker, you do all your buying and selling, through the exchange window over here. So once you've clicked exchange, it's going to bring you through to this page. Don't worry, it looks a little bit confusing right now, but we're going to get into how to understand all of this later on when we teach our more advanced method. So basically what you want to do now is you want to purchase Bitcoin. So the first thing to do is you want to make sure that you're on the Bitcoin to Rand section. And as you can see, we are BTC to ZAR. It is showing how much Rands one Bitcoin costs. Okay, so we know that we're exchanging from Rands to Bitcoin, so we're on the correct window. If we had Bitcoin and we wanted to exchange for Ethereum, for example, you'd have to come here and change it to ETH to BTC. Okay, that hasn't changed, so don't worry about what it says there. But now you can see over here under the place order, we're looking at Ethereum and Bitcoin. We don't want to be there right now though. We want to be Bitcoin and ZAR because we are using South African Rands to buy Bitcoin. Alright, so what we are going to do is first decide how much do we want to, how much of our South African Rands do we want to spend on Bitcoin. And in this case, we want to spend all of it. So if you only wanted to spend half of it, that's okay. I wouldn't recommend it. If you're sending money into this account, it's for one reason, it's to purchase cryptocurrency. So whenever you do send money in, it's more than likely you're going to use the entire amount. So in our case, we are going to use the entire amount. And the first thing I'm going to want to do is I'm going to click on the available balance. It's in blue over here. If you click on it, it'll automatically just fill the value in there. So I've clicked on it and it's automatically filled out some values for me. Now what that has done is, as you can see, the current price of Bitcoin in Rands is 83,006. So when I clicked on that, it automatically filled in the current price of Bitcoin for me. Okay, and it is said that that is how much Bitcoin I will receive. for if I buy 5,000 rands worth at the current price, all right, it will then give me that much Bitcoin. Now, usually what I do there, then you'd say place buy order, and then you might wait a little bit, because as you can see, if you look up there now, the price of Bitcoin has already changed. It's already gone up. It's already gone to 83,401. So what would happen if I had to place that order now, just after clicking that, it would have to wait for the price to drop to that value again before it buys for me. So I wouldn't actually get my Bitcoin straight away. Now, I don't want that personally. I want my Bitcoin right now. So what you're going to do is, if you're going to be buying Bitcoin, you should always be willing to pay a little bit more than what it currently is. That way your order will be executed instantly. So usually I just go for about a 20-30 rand difference. So let's look at the current price. So we know we want 5,000 rands worth. We know that the current price is there, 83,546. Add on about 20 rand to that, so 83,560. Let's make it. So I'm going to put that value in there, 83,560. So I'm paying a little bit more, 560, 83,560. Okay, price has dropped, so I'm going to make it 83,460. You got to constantly be on your toes because the price is changing, and I might have to do that a few times because I'm explaining a little bit before I actually place the order. So what I've essentially done is I've clicked that I want to spend 5,000 rand on Bitcoin. I've then gone and I've looked at how much the current price is, and I've said, you know what, I'm willing to pay a little bit more than what it currently is in order for my order to get taken instantly, for my order to be executed instantly. So it's the same as doing it this method, the easy method. You're still getting it instantly. It's still an instant order. However, you're not getting charged any fees because you're willing to pay a little bit more than what it is. So I'm going to go ahead and do that now. So I know I want to pay that much, so I've clicked on it. Step number 1. Step number 2, I'm going to look there how much I'm willing to pay. I'm willing to pay about 83,500 now. 83,500, because it's a little bit more than what the current value is. Click on it again. And then I'm going to say place buy order. Confirm. And straight away, it should have taken my order. Okay, I see the price has gone up since I placed the order. So let's go see over here if it's worked. Okay, it hasn't taken the order straight away. Okay, I'm actually glad this has happened because it shows you how to then deal with a situation like this. So right now we've got an order. I actually need to open up the screen a little bit. As you can see there, I have an open order that hasn't been taken yet. I want this order to go through instantly. Now, the reason this has happened is because I've set the order for 83,500. Unfortunately, when I clicked place order, the price jumped up slightly. So now I'm actually saying I don't want to pay that much. I want to pay cheaper. Now, they won't execute the order for you instantly if you want to pay cheaper. They'll wait for the price to get cheaper. So what I'm going to do is I'm going to cancel this order and I'm going to redo the process. So I'm going to say stop, confirm, and then you should see, there we go, my balance is back to normal, my available balance. So I'm just going to minimize the screen again so you can see better. Okay, so now I'm going to go through that process again, because as you can see, as I try to buy, the price went up and it didn't do the order instantly for me. So in that case, what you do is you'd cancel the order and redo the process. So currently the price of Bitcoin is 83,513. I'm willing to pay about 20 bucks more. So I'm going to make it 83,530. 530. I want to spend all of my money. Okay, price has gone up again, so I'm going to make it 560. Price has gone up again. I'm going to make it 80, 580. Make it 60 again because price has changed. You see, this can be a bit of a complicated process because price is constantly changing, and you always want to pay just slightly more than where it currently is. So 83,500, and I'm going to make it 580 just to be safe now. I want to spend all of my money. I'm going to say place buy order, confirm, and because the price is lower than what I've said I want to buy it at, it should take the order for me instantly. So I've said place buy order, I've said confirm. I should now have that money in Bitcoin. So let's refresh the screen. As you can see, I've only got 1 Rand something left in South African Rands, and my Bitcoin value has gone up. So I can go see my transactions there. So there you go. As you can see, I bought that much Bitcoin at that price. When Bitcoin was trading at that price, however, I did pay a little bit more. So that's how you would then buy Bitcoin using your South African Rands. So if we go wallets, we now no longer have South African Rands. We now have Bitcoin value in our account. We now own cryptocurrency.
Okay, so now that you have deposited South African Rands into your Luna account and you have purchased Bitcoin or Ethereum, we are now going to be showing you how to receive more Bitcoin or how to also send Bitcoin or Ethereum to someone else.
Okay guys, so as you can see, there is some money in this Luna account. That is because I'm not using the Luna account that I did the account creation video. I'm using my personal Luna account now just to show you the sending and receiving aspects. So obviously now that we've got some Bitcoin, you want to be able to do some basic things with it. So what I mean by that is you want to be able to send that Bitcoin, you want to be able to make payments with it, you want to be able to receive Bitcoin to your wallet as well. So think of this as like any bank account where you can deposit money, you can send money from it, you can receive money into it. It does all the same things. So let's get into that. Firstly, let me talk about sending. Now when you send Bitcoin, alright, you are going to want to go over here, more, or you could go straight over there and just say send. We'll do that. Click send. You want to send Bitcoin because that's what we have. Okay, now this is quite important. It says here send Bitcoin to mobile number, email address, or Bitcoin address. Okay, now depending where you're sending this, that's gonna ultimately decide which one of these you're going to use. So if you're using, or if you're sending Bitcoin to a wallet address or a Bitcoin address that is on a different exchange to Luno, so you're not sending Bitcoin to another Luno account, then you are going to have to send it to a Bitcoin address. I'll get to what a Bitcoin address is in a minute. However, if you are sending to another Luno account, what we say is send using either the person's mobile number or email address that they have linked to their Luno account. So when you signed up to Luno, you used an email. You would then want to send money to the email address of the person that signed up to Luno. And vice versa, if someone's sending you money to your Luno account and they're sending from a Luno account, remember this only works from Luno to Luno, then you can give them your email or mobile number to send to as well. And the reason is because if you do it this way, it's not actually a blockchain transaction, so there's no fees involved. So if you send 3,000 Rand of Bitcoin to someone's email address on Luno, there's going to be no fees from your end or that person's end. They're going to receive the 3,000 Rand on the dot, and the transaction will be instant. They'll get it the second you send it. Whereas if you're sending to a Bitcoin address, whether you're sending to someone else's Luno Bitcoin address or any other Bitcoin address on a different exchange, you're using the blockchain, so there will be some fees involved, and the transaction isn't exactly instant. It's not slow. It'll be there usually within 24 hours. But there are some fees involved. So if you want to send Bitcoin to another Luno wallet address, use the mobile number or email. However, if you're not sending it to another Luno account, you're going to have to use the Bitcoin address. So basically, you just paste in the address. We'll show you what an address looks like now. Put in the amount of Bitcoin you want to send, and then an optional note. You would then just say next, etc., and you'd be able to send some Bitcoin. All right. If you wanted to receive Bitcoin, and you wanted someone to send it to your Luno address, this is how you do it. You would click receive. You want to receive Bitcoin, and then here you wouldn't have an address yet. There would be a button that says like this, add address or create address. You would do that and Luno would automatically create an address for you. This is my address. It's just a series of numbers and letters, and that is something you definitely don't want to get wrong when sending to someone, because if you send to an incorrect address, that money will be lost. So that is a receive address. If you wanted someone to send you money to your Luno Bitcoin wallet, you would copy and paste this address and give it to them and tell them to send it there. However, like I said, if they're sending from a Luno account to your Luno account, don't give them this address, rather give them your email.
Okay guys, now we're going to be showing you how to sell your Bitcoin or Ethereum that you're holding, sell it back into your fiat currency, and from there show you how to withdraw the money to your bank account.
Alright, now we're going to get into selling and withdrawing cryptocurrency. So this is the last step. I know we're not including this as the last step in the series of videos, but when you are actually doing this whole process, when you're investing, this is kind of the last step of everything. So you've put money into cryptocurrency, you've sent it to another exchange, you've purchased crypto, years have gone by, you've made money, you want to now get that money. You don't want to leave it in cryptocurrency, you want to now withdraw it from cryptocurrency back into South African rands, and then actually get it back into your bank account so that you can spend it in normal fiat currency. So this is the last step of absolutely everything. So first thing we want to do is exchange Bitcoin or Ethereum for that matter, but we're going to use Bitcoin as our example for this entire course. So we're going to take Bitcoin and we want to get South African rands for it. So how do we do that? So exactly the same way as we bought Bitcoin. It's the exact same thing, you're just doing it in the reverse. So remember what I said earlier about when you purchase Bitcoin, you do not want to do it using this buy tab over here. If you use that buy tab, you are a taker. You don't want to be a taker because takers get charged fees. You want to be a maker. So if you want to be a maker and not get charged any fees on your transaction, you're going to go more, trade on exchange, or alternatively you can click there and say exchange. Ultimately you want to land up on this page, the exchange page. So now you can create your order. So what we're going to do is we now want to sell some of our Bitcoin. So you're going to click over here where it says sell. You're going to put in the amount you want to sell and the price of Bitcoin that you want to sell at. So currently price of Bitcoin is at 101,127. Obviously as soon as we opened this, that was the price of Bitcoin, 100,701. Shows you our available balance, etc, etc. So what we're going to want to do is first decide how much Bitcoin do we actually want to sell. So if you want to sell all of your Bitcoin, all you're going to do is you're going to click there where the available balance is highlighted in blue, and it's going to fill it out automatically for you. But if you don't want to sell all of your Bitcoin, you only want to sell some of it, you can do that. Say you've got 0.2 something Bitcoin, say you only want to sell half of it, so you're going to sell 0.1 of your Bitcoin. So you put in how much you want to sell, then the exact same process as before. If you want this to be an instant transaction, what you're going to do is you're going to look at the price, and you must be willing to sell it a little bit cheaper than what it's currently trading at. Alright? That way your order will go through instantly. So I would, for example, look at this and I'd say, okay, I'll sell it at 101,000 on the dot, because that's a little bit cheaper than what it currently is. So I would put that value in here. I'm not actually going to do it because I don't actually want to sell any of my cryptocurrency, but you would put that number in there. You say how much you want to sell. You place sell order. A screen will come up that says confirm your transaction. You say confirm, and it should go through instantly if this price has stayed the same, if this hasn't changed and dropped extremely low in a matter of seconds. And then once you've done that, You can close this page. You can come back here. You can say wallets, and you will see that your ZAR wallet would have updated, and so would your Bitcoin wallet have updated. You would then have sold some of your Bitcoin, so you would have 0.1085 Bitcoin, and you would have however much rands is the equivalent of zero point 0.1 Bitcoin. Once you've done that, the withdrawing process is very easy. You just go withdraw. Your card or your bank account will have already been loaded here because you would have already done you would have already sent money to Luno using that bank account, so it'll be here. And then you simply say how much you want to withdraw, and you say withdraw. And it's as easy as that. Money should be in your bank account within 24 hours. Okay guys, so now that you've invested in Bitcoin, surely you want to look at what other coins there are to invest in. So in this section, we're going to be jumping into altcoins and how to go about investing in them. Okay guys, so now that we are going to be investing in all different cryptocurrencies called altcoins, you want to go in with a bit of a plan in mind, a bit of a strategy. You don't want to just go blindly throw money into the markets and hope for the best. You want to have an idea, you want to have a bit of a strategy going in. So we have to look at money management. Excuse me. So the first thing you need to do is ask yourself the question, how much can I afford? So a lot of people ask, how much should they start out with? Is it 100 Rand, 1,000 Rand, $100, $1,000, whatever? The answer is, how much can you afford? You need to ask yourself that and you'll find the answer. We always say when it comes to any form of investment, this is cryptocurrency included, only invest what you can afford to lose. Now, we don't say that in a way of that you can expect to lose money in this. Not at all. What we're saying is that this is investing, and there's always an element of risk involved. So never risk money that you can't do without. So don't go sell your house to put money on the markets. Don't go change your lifestyle so that you can put money on the markets. Take money that you can afford to do without, money that you weren't going to use anyway, money that you were going to just put into a savings account or something like that. Whether that's 500 Rand, 1,000 Rand, 10,000 Rand, every person's different. It doesn't matter. Only invest what you can afford to lose, because there is always that chance that you are going to lose money. And that's just something that us as investors have to have an open mind about. You have to have an understanding, and you have to come to terms with the fact that this is a game of risk. It's not gambling. It is calculated risk, but there is still risk, and we've got to come to terms with that. So only invest what you can afford to lose. You can start out with as little as 10 Rand, if I'm not mistaken. So you don't have to worry about coming in with too little money. Obviously, the more money you put into the markets, the more money you can potentially make. But at the same time, it's also the more money you can potentially lose. So don't put money on the markets that you cannot afford to lose. Now, the second question you need to ask yourself is, are you doing this for the long term, or are you doing it for the short term? Now, the reason you want to ask yourself that is because you want to go into this with a bit of an expectation. I'm not saying that you need to go in with high hopes for anything great or anything like that. I'm just saying you need to go in this with a bit of an expectation of how you are investing, so that you can live your life accordingly. So, for example, if you're doing short-term investments, meaning that you're buying in now and you're looking to make quick turnaround profits and take them out, then it makes things a little bit more difficult, because you really have to focus on what's going on constantly. And if you want to make quick money, you need to put in more money usually. If you're looking for a quick 10% gain, I mean, a 10% gain can happen overnight, but what's a 10% gain on 10 Rand? It's only a one Rand profit. So short term, you need to put bigger amounts on if you want to make any sort of decent money. Long term is where you can put in a little bit less than the short term, and you can still reap huge rewards. Now, personally, we are long-term investors. We believe this is a long-term game. Like we said before, the crypto market is a very volatile market. So to go into this with a short-term trading style, in our opinion, it's not really worth it. You're not going to benefit off of the massive growth that crypto is going to bring, and you're going to overstress yourself in this thing, and you definitely don't want to do that. You don't want your emotions to take over. It's very volatile, and if you're looking for short-term gains and you see a big loss, a big fall in price, it's going to scare you and it's going to worry you. But if we're holding for the long term, falls, rises, whatever price does, it's not going to phase us too much, because we know we have a long plan in mind. Personally, I'm looking at this as a good 5-year investment before I look at what to really do with my crypto. Maybe a little bit shorter, maybe a little bit longer. We'll just have to see how it plays out. But at the time of making this is 2018, beginning of 2018. So I'm looking to wait a good couple years before I decide to start pulling cryptocurrency out. Okay, so on to the second point of rules. Okay, these are the rules you need to follow when investing in any cryptocurrency, not just altcoins, but any cryptocurrency, Bitcoin, altcoins, whatever. And rule number 1, this is very, very, very important. This is the most important rule, and it's hold on for dear life. Hold. Okay, so what that means, we have explained it before, but I'll go over it briefly again. If you make an investment and the investment goes in the negative, do not pull out at a loss. That's rule number 1 in crypto, is hold. Never ever sell at a loss. So if price falls, don't worry. We're in this for the long term. If you're in it for the short term, that's when you need to start worrying and looking at if you should pull out a small loss. But when it comes to long-term investing, rule number 1 is hold. Never ever sell at a loss. So if price drops slightly, don't let it bother you. Just hold it, because it will most likely go into the profit later down the line. Just for an example, we invested in a cryptocurrency called 10x. If you refer to your terms that we use in crypto, that we went over right in the beginning, a good example of what happened to us was we saw price rallying. Just look at your terms sheet, and you'll know what I'm talking about. Price was rallying, therefore we got FOMO, fear of missing out. We ended up buying into this cryptocurrency 10x at the wrong time because of FOMO. And then the big corporations started spreading FUD, fear, uncertainty, doubt. Therefore, the price dropped, and it dropped drastically. We were holding on to big losses. We had like 80% drawdown at least on those positions. But we followed rule number 1, and we held. We did not sell at a loss. We didn't let it scare us. And we held for a month or two, and next thing we could pull it out because we were in a nice big profit. So rule number 1, hold. Second point under rules, and this isn't necessarily a rule, but more a guideline, and that's add on to investments. Now, what I mean by that is, instead of pulling out a loss when price drops, rather, if you do have the money if you can risk more money, if you do have more money that you can afford to lose, what you can do is, if the value of that crypto is going down, you can buy more, because all you're doing is you're getting more at a cheaper price. And if you're holding this in the long term, that's exactly what you want to be doing. You want to be accumulating as much as you can at as cheap a price as you can. So more a guideline than a rule. If price is falling, rather look to add on to those investments so you can get more at a cheaper price. You want to accumulate as much cryptocurrency as possible. Then, as for the rule number 2, that's when it comes to risk, and that's only risk what you can afford to lose. I know we go over that so many times in this course, but we have to be very clear on that we don't want you putting money on the markets that you can't do without, because if you did have to lose that money, You don't want to have to make adjustments to your lifestyle because of it. Alright, and then lastly, when it comes to money management, you want to invest wisely. So what we always do is, because we also get the question quite a lot of how many cryptos should we invest in? What should we invest in? Should we invest a lot of money into one, or should we invest a little bit of money into 20? How should we go about this? Now, that is all completely up to you. The only thing that we recommend is that you don't put all your eggs in one basket. You don't want to be invested into one cryptocurrency and that you potentially think is going to go big. We want you to definitely accumulate a number of cryptocurrencies, and what we say here is the 20% example. Instead of taking 100% of your capital and putting it into one cryptocurrency, you could rather take 100% of your capital and invest it into 5 cryptocurrencies, putting in 20% of your capital into each. So that is definitely something you want to look at doing. We recommend using the 20% rule. It's definitely a good place to start, investing in five of your favorite cryptocurrencies. We personally, I think I invested in 7, if I'm not mistaken, and we have split those investments up pretty evenly.
Okay guys, now we are going to be talking about investing in altcoins. Number 1, what are altcoins? Altcoins are any cryptocurrency that isn't Bitcoin. So basically they are alternative coins to Bitcoin. And we need to ask ourselves, why do we want to invest in altcoins? The simple reason is that firstly it is good to diversify your investment and not put all your eggs in one basket. Your chances of catching the next big coin will only be better if you have a diverse portfolio of cryptocurrencies.
Okay guys, if we are going to be investing in cryptocurrencies, in different altcoins, you're going to want to know what an exchange is, because you're going to have to get listed on one. Now, we already are listed on one exchange, and that's Luno, but we haven't yet explained exactly what it is. What is an exchange? Okay, so it's a platform, an online platform where cryptocurrencies are exchanged. So what is an exchange? When I give you one thing and you give me something different in return, we are making an exchange. I can exchange my 10 Rand note for a packet of chewing gum at the shop. Okay, so it's when you're exchanging one thing for another. So that's exactly what an exchange is in cryptocurrency. It's an online platform where you can store, send, receive cryptocurrency, first of all, and then most importantly, you can exchange cryptocurrency. So we can exchange some Bitcoin for some Ethereum, which is another cryptocurrency, or we can exchange some Bitcoin for some Ripple, which is another cryptocurrency. So it's an online platform where you can exchange cryptocurrencies. Okay, now you can also think of it as almost like an online banking account that can do some extra things. So first of all, obviously the exchange side of things, exchanging one crypto for another, that's one completely separate thing that it does. But then it's also like online banking in a sense of it's an online platform that you can go onto, you can receive and you can send cryptocurrency. Okay, but we'll show you how to utilize all those features on the exchange that we're going to get you signed up on. Okay, so let's just go through our recommended exchanges. First of all, Exodus. Exodus is a local wallet. If you go back into the storage section of the cryptocurrency theory, we go over what a local wallet is. And it's basically just a wallet that you store locally on your device, like on your laptop that you're using, for example. And you can only access that wallet on that particular device. Okay, so Exodus is a local wallet. So it is primarily used for storing cryptocurrency. However, it is also an exchange because it has its own built-in exchange. So that's why I've got it listed here, but there's some stars next to it because it's a little bit different. It's not your typical exchange. It's actually a wallet with a built-in exchange. Alright, so if you wanted a good local wallet, you want to store your cryptocurrency on your laptop or on your particular device, Exodus is definitely a good one to look into, but we are not going to be going into that today. Next up, Binance. Binance is a altcoin exchange. It is a great cryptocurrency exchange, one of the biggest, and it's in red because that is the exchange we are going to be showing you. We're going to be teaching you how to get registered on Binance and how to use Binance as the exchange for purchasing cryptocurrencies. Next is Bittrex. We are not going to be going over Bittrex. It is basically completely the same as Binance. If you're able to sign up to Binance and use Binance, you'll be able to sign up to Bittrex and use Bittrex. It's very, very similar. We've chosen Binance to go over today. However, Bittrex is another exchange. It's exactly the same. If you would rather sign up on Bittrex, definitely feel free to do that. It works the same way as Binance does. So once we show you how to use Binance, you will know how to use Bittrex as well, because it's the same thing. And then lastly, Kraken is another account. And the reason we've listed Kraken here, we personally don't really use it anymore, but the reason we've listed it is because it's one of the only good exchanges that you can send money to and buy, or fiat money and buy cryptocurrency directly. So I can send my South African rands to Kraken. By the time it arrives to Kraken, it will be converted into American dollars. But once it is there in dollars, I can buy any crypto on Kraken that I want with the dollars. Bittrex and Binance are slightly different. You don't send fiat money to those platforms. Those platforms do not use fiat money at all. You have to send cryptocurrency to Binance or Bittrex, and then you can purchase other crypto. You can exchange the Bitcoin that you send for a different cryptocurrency. So Kraken allows international wire transfers. Bittrex and Binance do not. So the method we use is we use a local exchange like Luno to purchase our Bitcoin. We then send Bitcoin to our exchange of choice. In this case, it would be Binance. And then once the cryptocurrency Bitcoin is at Binance, we can then exchange it for another cryptocurrency. So those are our recommended exchanges, and we are going to be showing you how to use Binance as your exchange for altcoins.
Okay, so let's open an account on an exchange so that we are able to invest in other cryptocurrencies. The exchange we are going to be opening an account on is called Binance. So let's get into it and let's get started.
Alright guys, so now we are only on one exchange, and that is Luno. Alright, so that means you can only invest in two cryptocurrencies. That's Bitcoin and Ethereum. Now personally, for me, that's not good enough. I want to be able to invest in many different altcoins. Alright, so in order to do that, what we need to do is join a slightly bigger exchange. So the exchange that we're going to be joining today is called Binance. So what you're going to need to do is go onto www.binance.com and create an account on this exchange. Now, we have said we do recommend, there are other exchanges out there that are great. One of them is Bittrex. That's bittrex.com. That's a great exchange. And then Binance is exactly the same as Bittrex. But the reason we're going to be using Binance is because there are actually two particular cryptocurrencies that we like and we have invested in that you don't actually get on Bittrex, but you do get them on Binance. So that's why we're going to be joining Binance today. It's a great exchange. It's a widely used exchange, so you are safe using this exchange. So what you're going to do is you're going to go on to www.binance.com and you're going to say register. Okay, it's going to ask you for your email address and for you to create a password. It's also going to ask if you have a referral ID, but that's optional, so we're not going to worry about that. You're then also going to click that you agree Binance's terms of use. We'll do that for now. And I'm just going to say again that I have got my own personal Binance account, but for purposes for this example, I'm going to be creating an account for someone else. then click register once you've put in all the information. Now this is what Binance does even when you log in once you've created an account. This is just to make sure you're not a robot. You're going to click here, you're going to drag the puzzle piece into the correct spot. Alright, now it says it sent a confirmation email to the email address that you have linked the account to, so I'm going to go to that now. Confirm your registration, click the link below to complete verification, and verify email. Your account is activated, so then let's log in. Alright, now it's just going to say a few things here. Make sure you are visiting www.binance.com to prevent any phishing attacks. So what you must always do is whenever you log on to Binance, right, first thing you do is look up and look at the URL. Make sure that there is this trust badge over here that says secure. So it's a green lock, it says secure, it's all in green. That's how you know that you're on the correct Binance. The last thing you want is to be on a fake Binance account that, for example, some hacker or virus has created. You go onto the wrong Binance, you put in your personal information, and your money gets stolen. So always make sure you're on the correct exchange. Okay, so we're just going to tick all of these to say we've read them. You can read through them. Just make sure that you're on top of things. But they're pretty obvious. Don't give your password away, things like that. Click all of those, say you understand, and continue. Okay, so the next step here is they require that you enable two-factor authentication when it comes to having a Binance account. I'm going to say skip for now. I'm not going to do that just yet because I want to show you what happens if you don't. So we are currently unverified. Okay, you get different levels of verification. Same with Luno. Now remember, with Luno, level 1 verification only allowed you to send up to, or only allowed you to deposit up to 15,000 Rand, and then you can only withdraw up to 15,000 Rand. So Binance also has its different levels that have its each level comes with its own set of rules, you could call it. So currently we are unverified. In order to get to level 1, all we really have to do is enable SMS authentication. So it is a must when it comes to Binance. With other exchanges, you don't necessarily need to do this. It is recommended that you do it, but you don't need to. Whereas on Binance, it is a requirement in order for you to become verified, which is actually very good. It just upholds the safety of your account. So to get level 1, all you need to do is enable SMS authentication, and then level 1 means that you have a 24-hour withdrawal limit of 2 Bitcoin, which is plenty. Personally, we are on our private account. We are verified up to level 2, and I'll show you that process in a minute. But for now, we're just going to enable SMS authentication. I'm going to click enable. Now for the video, I'm creating an account for someone else. I don't want to disclose all their personal information, so I'm going to stop the video here and continue once I've added this all in. Alright guys, so I've just done that. So as you can see, it says disable now, which means I have enabled SMS authentication. Now I can go ahead and actually get verified. So how to do this? Okay, what you're going to do is you're going to come onto this page. Okay, how I access this page, first of all, is not through the main Binance. So if you click here on Binance, just want to give you an example of what happens. This is actually the front page of Binance. So there's no information about getting verified or what level you're verified or anything like that. If you want to do that, you've got to go here and you've got to actually click account. So it takes you to your personal account. Okay, so what we are going to do now is click on here where it says unverified. You can either click there or you can click here where it says submit verification documents. I'm just going to click here on unverified. Okay, now it's going to ask you what identity type. Is this a company account or is it a personal account? Now, in most of your cases, it's going to be a personal account, so you're going to click personal. You are going to select where you are. So either you're in China or you're not in China. Now, I'm not in China, so I'm going to select international. Now, you need to have one of the following in the next step. Either your passport, your driver's license, or your national ID card. Now, in South Africa, they are integrating the ID card system, where it's actually a card that you get, kind of like your driver's. It's no longer an ID book. Now, for me personally, I still have the ID book. I haven't gone in to renew my ID book, so I don't have the card yet. Now, if you do have the book and not the card, I recommend you don't use your ID. Only use your ID in this case if you've got the card. I have run into issues before with the book where they don't actually pick up that it's the correct document. So for this case, if you do not have the card, if you've got an ID book, rather use your driver's license or your passport. Okay, so I'm not going to fill in all the information here because, like I've said, I'm creating an account for someone else and I don't want to give away all their personal information. But you're going to basically put in your first and last name. You're going to say if you're male or female. You're going to choose where you live. And then you're going to either put in your passport or your ID number or your driver's license ID, whatever you're using. Okay, then you've got to actually upload files. So you've got to make photocopies and upload them. So whatever you're using, if it's your passport, then follow the example they're showing here. If you're using your driver's license or ID card, just make sure you upload the cover, not the picture with your face. So if you've got your driver's license, for example, the side of the card that your face, the picture of your face and all your information is on, that's not where you want to upload this. This is the front of your card. So it's the side without all the information in the picture. Then over here you're going to upload the one with your picture and your information, whether it's your passport, your ID, your driver's. And then lastly, you have to submit a photo, something like this. You've just got to get someone to take a photo, help you out. So you're going to use the same identification as what you've used here. So say for example you've decided to use your driver's license. I used my driver's license personally. You're going to upload the front of it, the back of it, and then you're going to upload a photo where you've taken a piece of paper, you've clearly written Binance and the current date. You're going to also be holding that driver's license or whatever ID document you're using, and your face is going to be clearly visible in the photo. So just follow these steps, read through this, follow the steps, and then say submit. And then I think, if I'm not mistaken, it can take up to 5 days before you're verified, but they will notify you on email, and you will be able to see it when you actually come onto your account. It'll actually say verified. It'll have a little, this will be in color, level 2 will be in color. So yes, that's how you get on to a Binance exchange. You would have completed the steps and you will be on your way to becoming registered.
Okay, so now that we've opened up an account on Binance, we will now need to send some cryptocurrency to Binance in order to purchase all the different altcoins that are available. So in this next practical example, we're going to show you how to send Bitcoin from Luno to Binance so that you're able to purchase these other altcoins.
Okay guys, so now you've completed the few steps leading up to actually making your investments into altcoins. So what we've done is we've created an account on an exchange called Luno. From there, you've actually gone and purchased Bitcoin on your Luno account. However, you can only purchase Bitcoin or Ethereum on your Luno account, and we want to actually get the benefit of being able to invest in all other altcoins. So now in order to do that, we've signed up to an exchange called Binance. You would have just gone through that process. Once you're verified, you then want to actually send the Bitcoin that you've purchased on Luno to your Binance account so that you can actually purchase other cryptocurrencies with it. Alright, so what we're then going to do is log into your Binance account and log in to your Luno account. Don't worry about this page. I was just on this page as my transaction list because I'm using my own personal Luno account to send this money. This is not my money. This is not my Binance account that I'm sending money to. I'm just doing it on behalf of someone. They've allowed me to do it for the purpose of this online course. So I've only come onto this. This is the transaction list page. If you go here and you click transactions, it brings you here, shows you all your transactions. I'm only on this page because I need to see exactly how much I want to send. This isn't part of the process. Okay, so it's 0.059824. That's the amount of Bitcoin I want to send to Binance. In your case, when you do this, you'll most likely send all of your Bitcoin. So however much Bitcoin you've got, you're going to send it to Binance. Okay, so I've made a note of how much up here on my Google search. I've made a note of how much I need to send. Okay, so I'm going to go to the main page of Luno, and I know I need to send 0.059824 Bitcoin to my Binance account. Okay, so how do we do that? Now, the way that this works is almost like a bank account. Now, when someone sends you money to your bank account, you need to give that person information. You need to give them information about that bank account so that they can send money to it. Okay, so you need to give them, for example, your bank account number. Okay, now this is going to work very similar, except you only need to give one piece of information, and it's almost like giving your account number. Okay, and it's called your wallet address. So now the first step is deciding what we are sending. We know we are sending Bitcoin. So we can't send Bitcoin to an Ethereum wallet address, for example. So we need to send that Bitcoin to Binance, your Binance account Bitcoin address. So we've logged into Binance, we're in the Binance account. And now what we're going to do is we're going to go funds and balances. Okay. Click on balances. Now you can see all the different cryptocurrencies here. But we want the Bitcoin address. So we're going to search for Bitcoin. Bitcoin, here it is, Bitcoin. Do not get confused and send it to Bitcoin Cash, Bitcoin Diamond, Bitcoin X, Bitcoin Gold, BitShares, Super Bitcoin. Make sure you send it to Bitcoin, BTC Bitcoin. Alright, so now what we want to do is we want to get the address. We need that address that we're going to send it to. So what you do is you come here and you say deposits. Under Bitcoin, deposits. You click that and it'll generate you an address. Now this is your Bitcoin deposit address right here. So if you ever want anyone to send Bitcoin to your Binance Exchange's Bitcoin wallet, you will need to give them this deposit address. Okay, now you can access it anytime. If I go through this again, we go balances, go to Bitcoin, deposit Bitcoin, and there it is again. Okay, so when you're sending Bitcoin to yourself, or if you want someone else to send it to you, you're going to need this address. This is where you send Bitcoin to. Okay, so we're going to click copy address. Okay, so this address has now been copied. Alright, we now need to send Bitcoin from here so that it ends up here. Okay, so we need to send it to this address, and how we do that is we go onto Luno, we go send, we are sending Bitcoin. Now it is asking, do you want to send Bitcoin to a mobile number, an email, or Bitcoin address? Now when it comes to mobile number and email, you can only send to a mobile number or email if you're sending to another Luno account. But in this case we're not, we're sending it to a Binance account. So you have to send it to the Bitcoin address. When you send it to the Bitcoin address, there are slight fees involved. There's always going to be some fees. But when you're sending to a mobile number or an email address to another Luno account, you're not getting charged any fees whatsoever. But in this case, we need to send to this address. So what I always do is I make sure the first two and the last two letters, when I've copied this, I make sure the first two and the last two letters are the same, just so I know that I've got the right code. Because if you send, this is one thing, if you send Bitcoin, for example, to an address, but you get this address wrong, you will lose that money forever. You will not be able to get it back. Okay? And the same goes with sending Bitcoin to this address. For example, if you're sending Bitcoin, make sure you're sending it to your Bitcoin address. Do not send something like Ethereum, for example, to your Bitcoin address. You want to send Bitcoin to your Bitcoin address. If you send Ethereum to your Bitcoin address, it will also get lost. Bitcoin goes to Bitcoin addresses, Ethereum goes to Ethereum addresses, etc., etc. Okay, so we know we're now sending Bitcoin to this address, 1xPN. So I'm going to paste it in over here. 1x is the first, PN are the last. So I know this address is correct. Okay, now how much Bitcoin do I want to send? Now in your case, you are most likely going to want to send all of your Bitcoin. Okay, and if you want to do that, all you need to do is click on the available over here. If you click on that, it automatically fills out. But for me, I'm not sending all of my Bitcoin. I'm sending 0.059824. 0.059824. That's correct. You can put a note there, optional. If you really wanted, you could say altcoin money. If you wanted, I'm not going to send any notes, but you can if you want. There's no reason to. You could use this as a reference if you're sending it to someone else. Okay, so we know we're sending it Bitcoin to this address. That's how much Bitcoin we're sending. Next. Now it's asking me to confirm, which I will do. The transaction has been authorized and will now be processed. Done. Okay. Now what happens is you've sent Bitcoin. Now the status, it says pending, and usually it says here this could take a few minutes. This could take a few hours. I've personally never had it take more than a day to arrive. But what's going to happen is you're now going to wait, all right, for this Bitcoin to send to your Binance account. Okay, so you've sent it. Now it's just a waiting game. All right. So you're going to wait. You're going to check up every now and then. And the way you're going to check up is you're going to come onto your Binance account. You're going to go funds, balances. And as you can see, we've got nothing, nothing, nothing. When your Bitcoin arrives, this Bitcoin over here will appear on the top because it'll be the only currency that you have a balance of. So it'll come to the top and it'll tell you how much you've got. Okay, so now we wait for that to arrive. And that is how you send Bitcoin from Luno to your Binance account. Alright, now that you know how to register on an exchange, you know how to send Bitcoin there, you know how to receive that Bitcoin on the exchange, you now want to decide what exactly you want to invest in. So the first step to actually exchanging that Bitcoin for a particular cryptocurrency is choosing which one to invest in. So how do we go about selecting what is a wise investment? So in the crypto theory section, we went over a website called CoinMarketCap. That's www.coinmarketcap.com. So that is a website where you can see all the different cryptocurrencies and you get a little bit of information about each of them. So what we recommend you do is you first go onto that website and you look through the cryptocurrencies, all right? Do your research. Go onto Reddit conversations, www.reddit.com. Once you're on Reddit, you can search any cryptocurrency name and there will be tons of discussions about it that you can read through. So when it comes to choosing an altcoin, what we always say is you need to do your research. There's no secret method, there's no secret trick to knowing which one is going to go big. You just need to do your research and not put all your eggs in one basket. So, like we said earlier, like with the 20% rule, take 100% of your capital and split it up into 5 different cryptocurrencies, putting 20% of your capital into each. Alright, so what we are going to do is we're going to do our research. There is no secret method to knowing which one is going to go big. You need to do your research, you need to see what people are talking about. We are not blockchain experts, we are not cryptography experts. We don't necessarily understand the science of these things, so all we can do as investors is do our research adequately so that we can see what other people are saying, and that way we can form our own decision on the cryptocurrency. Now, what we recommend is sticking to the top 20 or top 20 or top 50 cryptocurrencies on the CoinMarketCap. As soon as you start deviating from that top 50, you're starting to take a bit of risk. Obviously, the top 50 are the more the bigger sort of cryptocurrencies that have a lot of people on board, and those are kind of the ones you want to get involved in rather at this stage. At least it's still very early days even for the big cryptocurrencies, so we recommend looking through the top 20 to top 50 cryptocurrencies and making selections out of that for now. We have sent you a resources document along with this course as well. And in that resources document, we have websites that you should visit, like news websites and things of that nature, as well as our personal top picks. So if you're just getting started, you can go for our top picks. We do recommend you still do your research on them anyway, so you understand what it is that you're investing in. But you can have a look at those top picks, or you can go through that resources document and do your own research. So what we recommend you do is when looking through coins, do your research on each. So for example, you would go onto a website like Cointelegraph, which is a cryptocurrency news website. You might notice something when you're in the game and you're doing your research on a daily basis. We recommend checking out the cryptocurrency news on a daily basis. You'll start to notice things. You'll see, okay, wow, people are talking a lot about Ripple, for example. Maybe that's something I should look into. Now, what we always say is our secret weapon is hype. A lot of people say do not believe the hype, rather form your own decisions, do your own research and make your own decisions. When it comes to cryptocurrency, we completely disagree with that. We think that hype plays a huge role. Like we've said, what gives crypto its value is supply and demand. So obviously, the more demand for something, the higher the more the value will increase. And how better to create demand for something than to create hype around it? So we always say where there's hype, there's demand. Therefore, you want to be investing. So look where people are talking. Follow all those pages we spoke about on Instagram or that we've given you in our resources manual. Subscribe to those YouTube channels. Go through that resources manual and you will know exactly where to do your research. There's news sources, there's Instagram pages, there's YouTube pages there. There's some great, we've given you some great resources, and if you just follow those resources on a regular basis, you will definitely be making the correct decisions. So you want to be investing where the hype is. When there's a lot of hype around something and people are speaking positively about it, that's definitely something you potentially would want to invest in. So for example, if you're looking on Cointelegraph and you're on Instagram or whatever and you see, wow, a lot of people are talking about Ripple, for example, or Litecoin or Monero or whatever it is, then what you do is you go onto Reddit, www.reddit.com, you type in the name of that cryptocurrency and you can view a whole lot of discussions about it. You can see what people are saying, and you can form your own decisions from there. Okay, and then when it comes to placing an order, when you actually make an exchange, we will show you how to do that now, where you actually purchase cryptocurrency using an instant order versus using a limit order. Alright guys, so the last practical step that we actually took was sending our Bitcoin from Luno to our other exchange, Binance, where we can actually purchase other altcoins now. So let's go and have a look at our balances so we can see that the Bitcoin has arrived. So you go funds, balances, brings you to this page, and right there, the one on top will always be the one that you have the most value in. So as you can see, we only have Bitcoin. We don't have any other crypto yet. And just to take you through this page over here, you'll always see what you have most, and then it will go down in order from most to least. So as you can see, we've got Bitcoin, we don't have anything else. However, when we do purchase something else, if we've then got a little bit less of it than Bitcoin, it'll be right underneath it. Okay, then right at the top right over here, it also shows you value in Bitcoin and in dollars. So even if we had 5 different cryptocurrencies, it would still show us our total portfolio value in Bitcoin as well as in American dollars, just so you can easily reference to how much you have in total rather than having to go through each individual one and calculating each one separately, adding it all up. The exchange does that for you, so you can always easily see how much you have. Okay, so now that we have some Bitcoin, the next step would be purchasing an altcoin. So first thing, let's just go onto the exchange. I always use the basic option. You can use basic or advanced. They're not much different. They look slightly different, but advanced doesn't do anything that we necessarily need that the basic doesn't do. So we're going to use the basic exchange just for ease of use. Okay, and this is what the exchange looks like. This is where we're actually going to be buying a cryptocurrency with our Bitcoin. So, like I said before, it's always important to do your research of what cryptocurrency you want to purchase. So, what we always do is we go and we look at our CoinMarketCap. Personally, we never invest in anything that's not in at least the top 50. We like to say if it's not on the first page, it's probably not something you want to be investing in just yet because it could be a bit of a gamble. But look through the first 100. We always say stick to as close to number one as you can. Personally, we are only invested in cryptos that are in the top 20, if I'm not mistaken, unless something has dropped. Let me just have a look. Yeah, we've only got cryptos within the top 20. So the person that I'm investing for now, for the purpose of this video, they are going to be investing currently in IOTA. So that's what we're going to be purchasing in this video, for the example. Now, what I would always do, first thing, you wanna be purchasing something. Now, they didn't randomly just choose IOTA. This person is on the Instagram accounts that we have recommended, on the YouTube pages we have recommended, and they follow the steps that we recommend when doing research. And that is why they've made a decision to invest in IOTA. So first thing you're going to need to do is follow that reference list that you have been sent. Okay, we have sent you or given you a reference list of different websites you can visit, different Instagram pages to follow, different YouTube accounts to subscribe to. Please do that and check up on them on a regular basis, at least every day or couple of days. Just have a look and you'll be kept in the loop with what's happening. So obviously what's happened in this case is this person has done all of that. They've subscribed to the YouTube channels. They've followed the Instagram accounts. And what they're seeing is people constantly talking about IOTA. There's a lot of hype around IOTA. So what you then do is when there's hype, you know there's potential. So what we're going to do is some research. Now, everyone has their own different ways they do research. Some people like to read, go on Reddit and read through conversations about particular things. Personally, I love YouTube. YouTube for me is where I do just about all my research. The way I see it is YouTube will give you just about any info that you would need about something in video and audio format. So I don't actually have to physically read it or try and make sense of it myself. I can watch a video of someone making sense of it for me.
and it just makes life a lot easier. So what I've done is you go and you just type in the crypto name IOTA, and then you can look through and watch these videos. And I always recommend not only watching the positive videos but also watching the negative, so that you can weigh up your options and make a conscious decision. So a good one to watch is, yeah, how does IOTA work? You want to first of all know what makes IOTA special. What makes it different to other cryptocurrencies. So that might be a good video to watch. Then you want to see something positive, and you go, okay, great, let's look at this IOTA price prediction for 2018. And then another one, why all the FUD? If you remember from earlier, FUD stands for fear, uncertainty, and doubt. So why is everyone spreading FUD around IOTA? Just for the record, this guy, Louis Thomas, he makes great videos. I love his videos. So when you see he has posted on a particular topic, I definitely recommend watching it. He's got a lot of knowledge to share. And yeah, just basically search through YouTube and look at all the different videos and decide what you want to watch. Watch positive and negative videos. Not only positive, you don't just want to be fed positivity the whole time. You want to be fed realism. You want a realistic idea of a particular crypto. You don't want to just be told the good. You want to be told the potential downfalls and the potential bad parts about it, so you can make a conscious decision, so you can weigh up your options. So I'm not actually going to go through and watch all of these videos now. I have personally done my research, and I am personally invested in IOTA. I love it. I think it's a great cryptocurrency to invest in. But just to explain, that's how I do my research. I personally use YouTube. You can use Reddit to read through things and stuff like that, but I think YouTube is the absolute best source of information when doing research. So do a little bit of research first into what you want to look at investing in. Okay, so we've decided on IOTA, we've done our research, and we like it, we want to invest. Okay, so now we come back to Binance. We are on the exchange. We've gone exchange and basic. Once you're here, it is already on IOTA, but what you would do is you would search it in the search tab here. So for example, let's just, for argument's sake, pretend it wasn't on IOTA. You would go to the search tab, you would type in IOTA, IOTA, IOTA to Bitcoin, because you are purchasing using Bitcoin. Always remember that if you're using Bitcoin to make a purchase, it's IOTA to BTC. Okay, so we've clicked on that. We now want to make a purchase. Okay, so as in the slide we said we're going to teach you how to do a market execution, a real-time market execution, as well as a limit order. Okay, so let me just quickly, briefly explain the difference between the two. So a market execution is when you make an immediate execution into the market. So you want to take your Bitcoin and buy IOTA right now, immediately. You want to do an exchange straight away. You want to get rid of the Bitcoin and get IOTA instantly at the price that it is currently sitting at. Okay, so that is a market execution, an instant order, an instant buy. And then you get a limit order. A limit order is when you take a look at price and you decide, okay, I don't want to buy in at that price. I want to buy in cheaper. So you place a limit order. So the order is you've got a limit on that order. So when it reaches a particular price, it'll buy in for you. So I could, for example, look at this price and say, do you know what? I think this is too expensive. I want to pay cheaper, and I think that this is a great price to be buying at. You want to take it when it drops, because as you can see, price moves in waves. It goes up and down and up and down and up and down. I could say, okay, I think price might fall, it might come back down here. I'm only willing to buy in if price reaches this level. So you'd place an order at this price for a buy. So you'd buy into the crypto only when it drops to a particular price. So how you would do, I'll first do the example of a limit order, because we're not actually going to do a limit order. We're actually going to do an instant order for this example, but I'll show you how a limit order works first. So what you first want to do is decide what price you want to buy in at, in order to take a limit order. So say I've decided I want to buy in around here. 0.000021395. So I'm going to put in here 0.000211395. I've typed it in there. That is the price, the Bitcoin price of 1 iota. So that is the Bitcoin price of 1 iota. Currently 0.000021991. That is the Bitcoin amount of 1 iota. So that much Bitcoin will get you 1 iota token. So I've decided, okay, I don't want to buy in there. I want to buy in a little bit cheaper. So I've put in the appropriate price. Okay. Then you decide how much you want and etc. 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 Okay, so we're not going to do that. So I'm going to cancel that. And I want to do an instant buy. Okay, so here I'm going to buy in at 0.000211985. Okay, so now when you want to do an instant order, now we're actually going to be buying the crypto. So to do an instant order, what you're going to do is make sure you are on the buy section. This is where you do all your buying of the crypto you have selected. This is where you do the selling. So if I already have IOTA and I want to get rid of it, I'm going to use this. If I don't have IOTA but I want to purchase some, I'm going to use this. Okay, so it shows us our Bitcoin balance. Now the first step to buying is you need to, when you're doing an instant buy or even a limit order, is you need to decide how much you want. Okay, how much do you want of IOTA? So they've got these percentage buttons, which makes it really easy if you want to go by percentages. So say you have decided you want to purchase, you want to hold 4 different cryptocurrencies. What you could do is you could just click 25% on each of them. So you could say, okay, you want to spend 25% of your capital on IOTA. If I just click this 25%, it's going to fill out all the information for me. Okay, 25%. 25% of my Bitcoin balance will be this much, 0.0149498. That is 25% of this entire Bitcoin balance. And that amount at this price will get me 68 IOTAs. Alright, and you can do that with every crypto. If you're going to use 4 cryptos, however you're going to space them out. If you're going to get 2, use 50%, etc., etc. Those are just there to help you. Personally, I'm not going to use those. The person that I have, I'm buying for specifically wants 150 IOTA. Over here, it also says the max amount. The reason it's telling me the max amount is 272 is because that is all that my entire balance can afford. So if I had to spend this entire balance on IOTA at the current price, this price, that's how many IOTAs I'm going to get. Okay, so this person has decided they want 150 IOTA. That is how much it will cost in Bitcoin at that price. So what I always say, the first thing you want to do is not really worry about this price over here. Don't worry about the price. Worry about how much you want out of your balance. So if you want to spend 20% of this balance, you're just going to go and work out what 20% of that is. So as you can remember, in the balances section at the top right, it told you your entire balance. What you can do is you can take that balance in dollars. Let's say, for example, it was $500. You go work out what 20% of that is. If you want to spend 20% of your entire balance, for example, you work out what 20% of that $500 is. It's $100. Then you come here. Sorry, not yet. Then you're going to go onto Google. You're going to type in 100 USD to BTC, and it'll tell you the Bitcoin amount of $100. You're then going to come here and you're going to put that value in. So if I wanted $100 worth of IOTA, I would do this: 100 USD to BTC, 0.011 Bitcoin is $100. So then I would come here and I would say 0.011. Okay, $100 worth at that price will give me that much iota. Okay, sorry, 0.011 Bitcoin will give me that much iota. Okay, and that's simple. But I don't want that much. I want more. I want 150. That's just the decision that this person that I'm buying for has made. Okay, so now that you know how much you want, the value will be filled out automatically. You don't need to worry about this now. Now what you want to do is you want to select the price. So when you're buying from a seller. Okay, so these are all your sellers. So when you want to buy, I've put in the value. I know I want 150 of them. Okay, that's all I need to know is I want 150. In your case, you're either going to need to know that how many you want, or you're going to need to know how much Bitcoin value you want to spend on a particular a cryptocurrency. So once you've filled in either one of these values, the other one will automatically be filled out for you. So if I put in 150, this value comes out automatically. If I put in a particular value over there, it's going to automatically put how much I'm going to get. Okay, now you want to do an instant order. So what I'm going to do is you must always click on the very first one over here, the bottom on the sellers, because that is the closest seller at this price. Once I click this bottom price, I'm going to click buy iota and my order should be executed. If my order is not executed, it's because this price has changed. You see, this price constantly changes. Sometimes you might put in a value, and as you say buy, this price completely changes, and that price isn't actually available to buy anymore. And then you have to cancel the order and redo it. But let's see if this happens first time. I'm going to click on that value, and I'm going to say buy iota. Order submitted. And the order has been taken because there are no open orders. When it says open orders, if there's an order under open orders, it means that you've placed an order but it hasn't been taken. That will happen if you do the limit order example that I showed, where you don't want to necessarily buy in at this price. You've decided you want to buy when the price drops to a particular level. Once you've placed that order, it'll be under open orders because it hasn't been taken yet. The order is open. Once that order is taken, it'll be under the 24-hour order history. Okay, so let's go back to balances to see that we have our iota. And there we can see we now have iota and Bitcoin, and we actually have more iota than we do Bitcoin. Now, the reason this isn't 150 on the dot is because there are fees that are involved when making purchases. So the small fee, there was a small fee involved here, so I didn't get exactly 150, but I basically did, which is good enough for me. So now you have Bitcoin and iota. That is how you make a purchase of an altcoin on Binance. If you wanted to purchase a different coin, you go to exchange, basic, you search the coin that you want over here. If you want Ethereum, there's Ethereum. Now it's also important to note when searching here, search using the abbreviated version of the crypto. So don't type in Ethereum, type in ETH. Don't type in Stellar, for example, type in XLM. You can see what these are over here. So if you want Stellar, XLM. If you want Litecoin, LTC. That's what you're going to search here. You're going to click on it if you want Ethereum, for example. And you're going to repeat the exact same process that we just did.
Alright guys, I want to quickly do an example as well of how to do a limit order. So you've seen how to do an instant market execution, but sometimes, like we've said, price might run away, it might go very high. You don't want to enter with FOMO, fear of missing out. You don't want to climb in when the price is at its peak, when it's at its height. You want to buy in the dips because price doesn't move in one way. It doesn't only go up. It needs room to breathe. Think of price like a set of lungs. It has a deep breath in, and then it has after that it has a breath out. So price moves almost in breaths, where it'll go up and then it'll have to dip down before going up again. It can't just move in one solid direction. Price needs to breathe. So for an example of how to do a limit order, I'm going to be purchasing a cryptocurrency called Tron. Once again, I'm purchasing on behalf of someone else. I already do own Tron. I believe in it as an investment personally. So yeah. So what I'm going to do is, as you can see, price has gone up quite a lot, and it's at a peak. We're on a daily chart here. So each candlestick, as you can see here, that represents 1 day of price movements, each candle. So the pink ones are showing that price is going down, or red, I can't really tell what that is. And then the green ones are days when price has gone up, because as you can see, I've selected daily chart 1D. So I know that I don't want to jump in at this peak. I would like price to fall a little bit more. So I'm going to set an order for around this price. Whole lot of zeros, 800. That's where I want my order to sit. So when price falls here, it will automatically buy for me. It's not going to buy for me now because I feel price is a bit expensive. Like I've said, we've had a huge run up. I'd like to see a good dip before I buy again, and I think that 800 is a good target. So what I'm going to do is I'm going to use the remaining balance of Bitcoin that I have here. So I'm going to click 100%. It's going to fill out the entire amount. There we go. I'm going to use the remaining balance to purchase Tron, and I want to make the purchase at the price of 800, 800, with 100% of my Bitcoin. That would give me 916 Tron when I use all of my Bitcoin at that price. So I will not buy Tron now. I will set this as a limit order, and I will only be put into the market into Tron when price reaches this level, this 800 level. So I'm going to say buy, and then you should see here under open orders. That's the open order. So I do not have Tron yet, but when price reaches this level, I will. So that's an example of how to do a limit order. That is setting a limit order.
Now that we have invested in other cryptocurrencies, we want to be able to keep track of those investments. Now, the easy way for us to do this is to log them down on an app that you will need to download onto your cell phone, which is called Blockfolio.
Okay, so now that we have invested in cryptocurrency, particularly in altcoins on the Binance exchange, once we've done that, we want to now log those investments down somewhere so that we can keep track of them. Because it's pointless to make an investment in something and then just leave it and forget about it, because you want to know what's happening. You want to know, is your investment going up? Is your investment coming down? You want to be able to watch that investment so you can first of all decide if it does reach a high target of yours where you want to maybe take a bit of profit. You want to be able to see that easily. You want to be able to see how much your investment is up by, and if you maybe have some sort of a plan to invest more if the value of the cryptocurrency falls, you also want to be able to watch that investment as it's going in the negative, so that you know when to put more into that investment. So if we want to track our investments, there's a couple ways to go about it. Like, first of all, what you could do is you could actually write it down and log it down and continuously check online every day what the value of the crypto is, and then calculate how much it is worth every day. Now that is very complicated. It's time consuming. It's not the way we're going to go about things. So what we recommend you do is you download an app onto your cell phone called Blockfolio. So you'll go onto the Google Play Store and download Blockfolio, the app, or you can go on their website. This is the website, blockfolio.com, and you can download the app from the website. Now, this is a mobile app, so don't go on your laptop or computer and download it. Go on your phone and download it onto your phone. So this is the app we are going to be using to log our investments and easily keep track of them. Okay, so the first thing we need to do is obviously download the app Blockfolio. Once you have done that, you will need to come onto Binance where you've purchased your cryptocurrency. You want to go look at your order history. So you're going to go orders, order history. This will show you all of your orders that you have made in the past for cryptocurrencies. So we're going to go order history. Now the purchase that we showed you as an example for this course was the IOTA purchase. So we're going to be logging down this investment. As you can see here, there was also some Ethereum purchased on this account, but we're not going to be logging that down in this example. We are going to be looking at IOTA, particularly because that is the cryptocurrency we bought for this online course specifically. So once you are on this page, you can see information about this transaction. You can see that you bought it. You can see what price you bought it, the Bitcoin price that you bought it for. You can see how many you bought. Okay, so this information we are going to need to log down in Blockfolio so that we can keep track of it. But let's first just get you a little bit familiar with the app itself. I'm going to bring up some screenshots on the screen here off of the mobile app, just so we can talk you through the app itself and show you how it works. Okay, so when you click on your Blockfolio app and it opens, the front screen will look something like this. You will not have any cryptocurrencies yet on it. You need to log some down. Sometimes it doesn't happen all the time, but some people when they download this app, when they open it up, there are already cryptocurrencies here. It pre-selects particular cryptos for you. I think it's Bitcoin, Ethereum, Litecoin, Monero. Those are some of the coins that will pre-select for you. What I want you to do is go ahead and delete those cryptocurrencies that are on here. All you really need to do is hold or click on the cryptocurrency itself that is brought up here. Click on it. Once it brings you to that page, there'll be a little dustbin icon at the top. Click the dustbin and delete that cryptocurrency off of the app. We want to start from fresh. So once you've got it fresh looking like this, you've got $0 portfolio value, and this is what it looks like. This is your starting point. So the first thing I want to tell you is while you are on the Blockfolio app, you can look at either the dollar value of your portfolio or the Bitcoin value of your portfolio. So the way to change that is currently it's set to dollar. What you do is tap on your screen on this amount here where it says 0.0 and the dollar sign. If you tap on it, this will change to a Bitcoin symbol and your entire Blockfolio app will change to show you all values in Bitcoin rather than in dollar. So it's up to you if you want to look at things in dollar value or Bitcoin value. Personally, I like to leave it on dollar value. It makes more sense. It's easier to calculate when you quickly look at it to see how much monetary value your portfolio holds. But if you click on this section right over here, it'll change to Bitcoin value and it'll look like this. So as you can see, it's now changed to a Bitcoin symbol and it'll show everything in Bitcoin value now. All right, so let's get into the app itself. As you can see, we have some icons here at the top that mean different things. If you click on this first icon over here, it'll bring you to the My Portfolio page. Okay, and it works the same. As you can see, the Bitcoin symbol is selected. If you want to see the dollar value, just tap your screen over there and it'll change to dollar value. Currently, we do not have any investment logged here. That's why you can only see the grid. There's no chart. But what will happen is once you've made investments and you've logged them down, over time, a chart will actually build up and it'll show you if your investment has gone up or down or exactly what it's done over a given period of time. Okay, if we click on the next icon, which is this one right here, that brings you to our news tab. Now, on Blockfolio, it has built-in Cointelegraph and CoinDesk newsfeed. So every article that is posted to Cointelegraph or CoinDesk will pop up here in your Blockfolio newsfeed, which is very, very useful if you're on the go on your phone and you want to check the news on your phone. It's an easy way to access it. Okay. Now what we need to do is add our transaction. All right, so you know how to check your portfolio history, you know how to check your news, but that isn't really what we use Blockfolio for. Blockfolio we primarily use for logging and tracking our investments. So what you're going to want to do is you're going to either click over here on add coin, or you're going to click on the plus sign over here. It'll take you to the same page. Okay, and once you've done that, it'll open up a page like this where you will then type in the cryptocurrency you are looking to log. So in our case, we are going to be looking at IOTA. So you're going to type in their IOTA, or whichever one you have purchased. In our case, we're typing in IOTA, and then we're going to select it. We're going to click this, okay? Once you've done that, it'll bring this up. This will be your front IOTA page, okay? So normally it looks like this if you've got nothing logged. Now what will happen is you will actually have a cryptocurrency window over here, and it'll have the coin symbol and it'll say IOTA. Once you're on this page, if you then click on that cryptocurrency section for IOTA, or for whichever crypto you have, which crypto you are logging down, it'll then bring up this page. Okay, so we don't need to worry too much about this page. This is basically just the most important part of this page is it's showing you the chart. Okay, once again, we are seeing the Bitcoin value of IOTA over here. So this amount of Bitcoin is equal to 1 IOTA. If you want to see the dollar value, then once again, just tap over here, tap on your screen, and it'll change to dollar value. Over here, we have a chart where this chart represents price movements. As we can see here, price went up. That was around the 10th of December, and it's dropped. This is giving you a 6-month view. That's why the 6M is over here. This is giving you a 6-month view. Okay, if you want to change the view, you can tap over there. It'll bring up a menu like this, and you can decide what you want your chart to represent. So you can select it that this entire chart represents 1 hour. So this chart, if you select 1 hour from the drop down, this entire chart will show you what happened in price over the past hour. Okay, so that is the details section of the cryptocurrency page. When you click on a cryptocurrency, the page that comes up, this is the details section. The book section, we do not need to worry about at all. We're not going to be looking at that. The next page that we're going to look at is if you click over here under alerts. Okay, and what that does is it allows you to add a new alert. Okay, if you want to add an alert, you can. And now we don't really use this, but it's good to teach you in case you do want to use it. Now what this does is you can set specific price targets where the app will alert you in the style of an alarm when price reaches a specific level. So if you were, for example, in an investment and you decided when your investment has doubled, you want to take some of that money out, you want to take some of that profit, you can then set an alert for the price of the cryptocurrency once it has doubled. And once it hits that price, you can then you will then get an alarm, and then you know to go and take some of that investment off. So whatever you want to use an alert for, you can do it. So when setting an alert, it's important to first select the exchange that you purchased it off, and in our case it's Binance, so that's already selected. If you want to set an alert for if price reaches a specific target above where price is currently, you're going to use the above section. And if you want to set an alert for if price drops to a specific level, you will use the below section to put in the price that you want. Then you can also choose the alert frequency. So does it alert you once, or does it persistently alert you until you go in and turn this alert off? Okay, we don't really use it that much, but if you want to use the alert tab, feel free. Okay, and then lastly, what we want to show you on this is the holdings section. Now, this is where you're going to be logging your actual investment down, and this is the section that you will be using most on Binance. Sorry, not on Binance, on Blockfolio. So if we go to the holdings section, it takes us to a page where we can add a transaction. And this is where we're going to need these figures over here. Okay, so if we want to add a transaction, the first step is to select the pair. It will be automatically selected, but in this case, we're looking at IOTA. Okay, next is to select the correct exchange. Always make sure you have the correct exchange selected. In our case, it is Binance. We have bought this cryptocurrency, so we have selected buy over here. And then the only things we need to fill out is the trade price, the quantity, and the date. Okay, so first thing is the trade price. We need to fill in the price. All right, and in this case, it was 0.00021,920. So we've put that in there, 0.00021,920. That was the price we bought at. We need to then look at how much we bought, and we need to look at the filled tab for that, and in this case it's 150. So we're going to go put that figure in there, 150. Then we are going to put in the date, and as you can see, we made this purchase on the 2nd of May, so we've put that date in there. Once that is done, all you need to do is click save, and your investment will be logged, and it will look like this when you click on the holdings page. So from now on, whenever you go onto Blockfolio and you want to check your investments, you'll be taken to the front page. You will then click on the cryptocurrency in particular you want to see. Once it's brought up, you will then click on holdings, and you can then see your investment. And as you can see, it is currently the 4th of May. This investment has already gone up over 15% in a matter of 2 days. So we can see there the dollar value, how much it cost, how much the investment is worth now. It tells you the dollar amount that you're in either a profit or a loss, as well as the percentage. If you wanted to see the Bitcoin values, all you need to do is tap on the screen over here by market value, and all of these figures will change to show you the Bitcoin value. If we then go back out of that, this is now the front page of your Blockfolio, where you will see your cryptocurrency that you have logged. It'll show you your total portfolio value, and just click over there on the screen if you want to show the dollar value. Now that we have done that, we are able to easily track our investments. Okay, now we are going to be showing you how to send different cryptocurrencies and how to sell them as well back into your normal currency. So how do we go about getting out of the markets? This is pretty much the last step, and it's probably something you're only going to be looking to do many years down the line, but you want to know how to do it now anyway. So first we are going to show you how to send different cryptocurrencies, so how to send them from and to the correct address. Then also, when it comes to selling your coins, just remember rule number one. Rule number one is hold. Never sell at a loss. And then just remember also that we're in this for the long term, not the short term. So you don't really want to be looking to sell your cryptocurrency anytime soon. This is your personal investment that you're going to be making, and if you want to sell it soon, that is completely your choice. I'm not saying that you may not. Just saying that we advise that you hold it for the long term. Don't look at pulling out now. When Bitcoin was 1 cent a coin, and it went up to like 30 cents a coin, there were people that sold and were raving about it like they had made so much money. Imagine those people had just held on to those cryptocurrencies for a couple more years. Bitcoin is now worth around $8,000 to $10,000 currently. So the people that sold at 30 cents, yeah, maybe they made good money, but
They would have made a lot more if they'd held it for the long term. So we definitely think you don't want to be selling your coins anytime soon. And then we are going to be showing you basically how to sell your coins through an instant order, a limit order, and then we're going to show you how to send that Bitcoin back to Luno, and then put it back into normal currency and withdraw it to your bank account.
Okay, so now we have gotten to the end process of altcoins, and this is something that you'll most likely only look to do much later down the line. This isn't something you're going to be doing now, but it is something that is important to know how to do in case you do want to do it at any given time. So what we're going to be looking at is sending and selling cryptocurrencies. So now that we've actually gone about taking money from our bank accounts, investing in cryptocurrencies, sending it over to this exchange, Binance, how do we go about actually getting our money back if we wanted to? So I'm going to be showing you how to do that. So what we're first going to do is we're going to go here to funds, just to go have a look at what we have and the different sending options. Okay, so as you can see in this account, we only have IOTA, Ethereum, and Bitcoin. As you can see here, IOTA, our total balance and available balance is the same. Ethereum, our total balance and available balance is the same. And Bitcoin, we have a total balance and an available balance that is completely different. And the reason we have that is because, like we showed in the course with the limit order, we placed an order that hasn't been taken yet. So as you can see, it shows here we've got this much currently in the order waiting to be taken. And once that has happened, then we will have a different cryptocurrency. In this case, it'll be Tron, and we will then only have this balance as our total balance. But that's not too important right now. What we're looking at is sending and selling our cryptocurrencies. So first thing when it comes to sending, this is something that it's going to take very quick to just go over really quickly. And it's basically when you're going to be sending, you must always make sure that you are sending to the correct cryptocurrency address. Okay, and what do I mean by that? Not only must the address of the crypto be correct, but the cryptocurrency itself has to be correct too. So what do I mean by that? What I'm trying to say is I cannot send Bitcoin to an Ethereum address. I cannot send IOTA to a Bitcoin address, okay? Bitcoin needs to be sent to Bitcoin addresses, Ethereum needs to be sent to Ethereum addresses, IOTA needs to be sent to IOTA addresses. So then you might ask, but what if we've now purchased IOTA, but we want to get rands back and Luno doesn't have any IOTA as an option? So how do we get that back? So then what you would do is you would sell this IOTA for Bitcoin and then send the Bitcoin to your Bitcoin receive address on Luno and withdraw it from there. Okay, so just to give you an example, if I want to send Bitcoin, I would say withdraw, okay, because you're withdrawing it from this account, you're sending it to a different account. So you would say withdraw, okay, and then you are going to put in the address that you want to send to and say how much you want to send, okay. So I would then go receive. I would like to receive Bitcoin. This is the address I'm going to need. I'm going to click on that, and then I'm going to click here to copy it. As you can see, it says copied. I will then go here, and I can paste in that address to send cryptocurrency to it. Okay. If I wanted to send Ethereum, I would have to do it this way. I'd have to go Ethereum, withdraw. I'm then going to come here to receive on Luno. My Ethereum receive address is what I need to be copying now. Copied. I can then paste my Ethereum receive address there. I can say how much I want to send, and then I say submit. And it's as easy as that. And it doesn't only work that way with Luno. If you are going to send Ethereum anywhere, it has to be to an Ethereum address. Okay, so that is how you send different cryptocurrencies. So before we go about sending though, we're going to need to actually sell some of the cryptocurrency for Bitcoin. We need to show you how to do that and then send it from there. So what you need to do if you would like to get rid of some of a particular crypto or all of it, you're going to go over to the exchange, because whether you're buying or selling, we always use the exchange. We're going to go to the basic exchange. Let's say, for example, we wanted to sell IOTA. This order is very close to getting taken, it seems. As I predicted, price is falling. Like I said, you want to buy in when price is falling. Sorry, that doesn't really go with what I'm teaching right now, but just thought I'd show that quickly. Okay, but let's go on to IOTA. Let's say you've purchased IOTA, but now you want to sell off some of that investment. So what I would do is, if I wanted to sell IOTA, I would come down here. I would first decide how much I want to sell. How much of my IOTA do I want to get rid of? So I have that as my IOTA balance. If I wanted to get rid of all of it, I could. However, let's say I just want to get rid of 50 of my IOTA coins. Okay, if I want to get rid of 50 of them, or maybe a specific percentage, maybe I want to get rid of 50% of them, which is 74 IOTA. Then I'm going to be selling to a buyer, and I want to sell to the closest buyer to the spread. So I would click on this over here. Remember, if you're buying, you're going to click on the first red one. If you're selling, you're going to be clicking on the first green one. Once I click on that, I then say sell IOTA, and I should have Bitcoin now in place of this IOTA. I'm not actually going to do that because I do not want to actually sell this IOTA, but that is how you would do it. Okay, you then sell your IOTA for, or whichever cryptocurrency, for Bitcoin. Once that has been done, you are then going to go to balances. You will see your new updated balance. You will no longer have as much of the one cryptocurrency, and you will then have more Bitcoin. And then you are going to want to send that Bitcoin to Luno, and I've already showed you how to do that. You're going to say withdraw. You're going to get your not your Ethereum, your Bitcoin receive address from Luno, and you're going to send it there. Okay. Once your Bitcoin has been sent there, you then need to sell it on the exchange and put it back into your bank accounts, which we have already shown you how to do in a previous video. And that is how you do that.
Okay guys, let's get into the last section of the course, where we will be teaching you a pinpoint entry and exit technique. It is important to note that this method can be used for day trading purposes, whereby you can actively buy and sell Bitcoin for daily profits. However, we personally do not day trade cryptocurrencies, as we are long-term investors. Alright guys, so you may be asking yourself, what is trading? So let's get into it. Trading is the process where you buy and then sell for a profit based on short-term price movements. When it comes to trading, your entries and exits need to be precise so that you can make quick profits off of these smaller short-term movements in price.
Alright, so let's get into the pinpoint entries and exits technique practical side of things, where I'm going to be showing you exactly how this technique works. Now, before I even show you how it works, I'm going to explain a little bit about it. And just firstly let you know that we personally do not use this method to day trade. So just to give you a bit of an idea and a background of what you can use this for, and what we personally use it for. So what we personally use this method I'm about to show you for is when we are initially taking money from our bank accounts and putting it into Bitcoin, or sending it to Luna and putting it into Bitcoin. That first initial buy into Bitcoin, we use this technique so that we can get the most precise entry into the market. We want to try and buy into the market as cheap as we can. So we use this technique when we are entering into the market to get in as cheap as we can, a great pinpoint entry price. And we use it when we are actually taking money from Bitcoin into South African rands, and we want to actually send it back to our bank account in order to pay ourselves or whatever that may be for. When you're actually taking that money out of Bitcoin back into South African rands and you actually want to cash out, we use it then as well, so that when we get out, we are getting out of the market at the highest possible price. So when we buy in, we're buying in nice and low. When we're selling out nice and high. So you're buying for cheap and you're selling for expensive. That's how you make a profit in this at the end of the day. When you buy in, you want to buy in cheaper than when you sell out. So we personally use this method for that reason when we're buying in initially and when we're selling out. It's a great way to pick a pinpoint entry to get in as cheap and to get out as expensive as you can. Now, what you can use this method for is for trading purposes, for day trading purposes. So let me go about explaining what is day trading exactly. So day trading is the process where you are attempting to make smaller, more regular profits. So you're looking to profit on a daily basis, or grow your investment on a daily basis. So that's what day trading means. It's growing your investments on a daily basis or making a small return on a daily basis, so a profit. So the way you would do this is, like I said, how we use this technique is to get a pinpoint entry into the market. So we're buying Bitcoin at a cheap price, and then we're selling Bitcoin later down the line at an expensive price. But if you're trading it, what you're actually attempting to do is buy in at a cheap price now, and within the same day or within at least a short period of time, you're then going to sell again for a profit, so a short-term profit. So the point of a day trade, for example, let's say Bitcoin costs 119,000 Rand, 333. Okay, first of all, when it comes to day trading, it's only really worth it when you've got larger amounts of money. When you're doing it with a very small amount of money, it's almost not worth it, because if you had to start, let's say, with 1,000 Rand, okay, and you're trading it, in order for you to make 1,000 Rand profit for the day, which, let's face it, it's good money, but it's not a lot of money. If you only had 1,000 Rand, in order for you to make 1,000 Rand profit in one trade, the price of Bitcoin would literally have to double. It would have to go from, let's just call it 120,000 to 240,000. So it's not really worth it if you're doing this with smaller amounts of money. It's only really worth it if you're doing large amounts of money. So think of it this way. Let's say you've got an entire Bitcoin worth of money. So let's say you have 120,000, okay? Or let's say you're using this amount on the dot, 119,333. You can easily see this price go up and down 20,000 Rand in a day. So if you're using an entire Bitcoin, you're looking at potentially thousands of rands that you can make in a day. But that's only if you're trading with this entire amount. So if I buy in at 119,333 and I wait for it to go up to just 120,000, which is nothing. I mean, it can go up to 120,000 in a space of a few minutes. That's a 700 Rand profit you've just made, just like that, because you've got the entire amount. So trading only really works if you've got a larger amount, and it does take patience. It takes a lot of focus. You've got to sit in front of your chart and watch what's going on. We'll get into that now. At the moment, I just want to explain so you have a clear understanding about what this is that you're getting into now. So what we're going to teach you is a pinpoint entries and exits technique. Use that as you will. If you would like to trade it, you are your own person, feel free to do that. However, we do strongly recommend not attempting to trade Bitcoin using this technique. You can if you want, and I do know people who do this and are profitable. But the way I see it is you are putting extra risk on yourself if you're trading it. You're risking potentially missing out on big moves. Because, for example, let's say the price drops to 115,000. Let's say that's where you've decided you want to enter. That's your pinpoint entry. When it drops to 115,000, you buy in. Then maybe you think, okay, when it gets to 120,000, you're going to sell. And then what ends up happening is you sell at 120,000. You now no longer have Bitcoin, and then the price just continues to go up. You're actually then missing out on valuable percentage gains. So if you're not holding Bitcoin, you're risking missing out on potential gains. So that's why we say we rather buy in and we hold for the long term. We're not trying to decide where price is going to continuously reverse from. We are investing for the long term. So we use this method when we get in and when we get out in the future. But like I said, I do know people that use it to day trade and they are successful with it. It just takes a lot of patience, it takes a lot of time, and there is added risk. There's no doubt about that. There's definitely added risk if you're going to be trading it. But hey, if you want to do it, go for it. So let's get into how exactly we're going to go about trading this and how we decide where our entries or pinpoint areas are where we're looking to enter or exit the market. All right, so where you'd use the exchange to buy into the market, we're going to use the exchange for trading as well. So as you remember, when you want to buy into the market or sell out, you do not want to be a taker, you want to be a maker. I did explain this previously when buying Bitcoin for the first time. You want to be a maker. You want to make the order on the exchange, that way you don't get charged fees. Takers get charged fees. Takers are the people that just buy and sell over here straight off the front of the platform. And if you scroll down, I actually want to show you. If you scroll down, it actually tells you here your current trading fee. I've currently got a 1% taker fee and a 0% maker fee. Maker fees are always 0%. Taker fees can vary. So my taker fee is 1%, but that's because of my 30-day trading volume. I have bought in and sold and whatnot Bitcoin in the past 30 days. And if your trading volume is high for 30 days, your fee will drop. So the more you're buying and selling, the lower your fee will be. However, if you're buying and selling using the exchange, it's not going to matter anyway because you're not a taker, you're a maker. So you're getting 0% fees anyway when you're trading it here, or where you're just simply buying or selling in the future here. So let's get into what are we looking at here. Okay, so like I said, when it comes to trading, the aim of the game is to buy when the price is low and to sell when the price is high. That's also the aim when just getting into the market and when simply getting out of the market. You don't need to be trading it to know that you want to buy in cheap and sell when the price is high. The thing is, when you're looking at this in a long-term perspective, it's easy to buy in cheap and sell out high because we know that price is going to climb over the coming months, years, whatever it may be. So you could pretty much just buy in instantly and sell out instantly in the future for a profit. But when you're trading it actively on a daily basis, you have to be very, very careful with where you put your entries and exits. Like the technique says, this is a pinpoint entries and exits technique. You want to be pinpoint accurate with when you're getting in and when you're getting out of the market. Okay, so first of all, when it comes to trading, when you're looking for these short-term price movements to profit off of, it's important to note that the hold rule still applies. HODL, hold on for dear life. It still applies. So even if I buy in at a particular price, if it continues to fall once I've bought in and I'm actually going in a loss, I'm not going to sell at a loss. I'm going to hold it until I am in a profit. Okay? When it comes to trading, I always say be very hasty to buy Bitcoin, but do not be hasty to get rid of your Bitcoin. So what I mean by that is, when you're buying in, you always want to be holding Bitcoin because you want to benefit off of its growth. Okay, when you're not holding Bitcoin is when you're actually bearing the risk. Okay, in terms of trading and short-term profits. When you're not holding Bitcoin, you're holding risk. So, like in the example I gave earlier, if I buy in at 115,000, okay, then price goes up to, let's say, 120,000, and I decide I want to sell. There's a nice profit that's been made there from 115,000 to 120,000. So I sell at 120,000. I'm now not holding Bitcoin anymore. I now hold South African rands. What if the price continues to go up to 150,000 without stopping, which it can very easily? I've now missed out on valuable percentage that I could have gained in my investment. So I have now let go of my Bitcoin. I was hasty to get rid of the Bitcoin, and now I've missed out on potential profits. So that's why I say, be hasty to purchase Bitcoin, to buy in, but don't be too hasty to sell, because you want to hold that Bitcoin. You want to benefit off of the price increase. Okay, so let's get into exactly what we're seeing here. The first thing you're probably seeing here is this chart right in front of me. So this is a chart that we're not actually going to be using. As you can see, candle is selected. You can select different types: candle, line. Candle and line is exactly the same. It's just a different way to represent price. So what these candles mean, let me explain. Each candle represents a particular time period of price movement. Okay, so these are daily candles, as you can see. So this candle represents the 12th of April. This candle represents the 13th. This represents the 14th, 15th, 16th, etc. So this is how much price moved in one day on the 12th of April. Okay? When you see green candles, it means price has gone up. When you see red candles, it means price has gone down. Now, each candle represents one day because I've selected the monthly. You get 30 candles here, or 31 candles. I've selected the monthly chart. I can select the daily chart, and that way each candle represents half an hour. Each candle represents half an hour of price movements. Okay, but let's go back to the monthly chart. That way we can see daily candles. So we can see on this day, price moved up quite a lot. We went from 83,000 all the way to 95,000 in one day. So that is a huge price movement in one day, from 83,000 to 95,000. So you can imagine, if you had one Bitcoin and you were trading with that one Bitcoin, you could have potentially made yourself just over 10,000 Rand in one day using this technique. Okay, here another one. Price went from around 113,000 to around 123,000 in one day. That's how much price moved. So that's another 10,000 Rand it moved in one day, whereas here it went down roughly 10,000 Rand in that day. So this represents the movement of price. This is a visual representation of the past movement of price. So this is showing us the past. Okay, this shows us what has happened, but we're not interested in what has happened. We're interested in trying to figure out what is going to happen. Okay, so this doesn't really help us. This shows us, okay, great, we know what happened throughout the month of April. That doesn't matter to me. I want to know what's going to happen today. I want to know what's going to happen tomorrow so that I can benefit off of it. So that's why we do not use this chart. We don't use a candle chart. Okay, a line chart is the same as a candle chart. You can just see the movement in price on a line graph rather. So you can see over the past month that price has gone up quite a bit. We are not going to be using the candle or the line chart today. We are going to be using the depth chart. This is what we use to do our analysis on. This chart along with the order book in this trading technique. So it does look very complicated, but I can assure you it's not as complicated as it seems. Once I get explaining, it'll be a lot simpler. So let's not worry about the depth charts just yet. Let's look at the order book. Okay, what do these figures mean? Actually, before I even get into that, let me just explain on the right hand side. These are trades that have happened on the exchange. Okay, but for the past 24 hours. So currently it's 9:06 in the morning. So you can see here there was a sell order. So someone sold Bitcoin at 119,332 Rand, and that's how much they sold. Also at 9:06, someone sold at that price. That's how much Bitcoin they sold. Again, 9:05, someone sold at this price. As you can see now, it's 119,333. Someone here sold at 119,332, and that's how much Bitcoin they sold. These green ones are buys. So the reds are when people are selling, the greens are when people are buying. So as you can see, there's there's a mix-up, but there's a lot more people selling at the moment. And the reason that is because, like we said, we can see over here from like this chart, for example, that price has gone up. So people are looking to sell. These are most likely people that have all bought in somewhere here where price is low, and they're now selling at the newer higher price. That's why there's a lot of sellers, because a lot of these people would have bought in low and they're now selling high. Okay, let's go back to the depth chart. So we don't need to worry about this too much. This also shows us history. This shows you what has happened. At 9:07, someone sold here, someone sold, someone bought, someone bought. That history doesn't help us. We need to know what is going to happen. Okay, so let's get to the order book. Alright, so when we look at the order book, we see a bunch of figures, and this may confuse you. So first of all, it says on the heading order book. So we know this entire section is our order book section. Okay, here we have the ZAR price, which is South African rands. Here we have amount, which is the amount of Bitcoin. Okay, these figures are red, these figures are green, and here we have a spread. Okay, so let me explain first of all what it is you're looking at. These are all orders. Okay, these are all orders that have been placed for the future. Okay, so just like I said, if we want to buy in cheap, okay, I might decide I don't want to buy here at 119,333. Maybe I want to buy in at 115,000, just for example. What I would do is I would come here, I would say how much I want to buy. First of all, I would need South African rands. I don't. But if you're trading, you will have South African rands or Bitcoin, whether you're buying or selling. So let's say you want to buy in. You're going to say how much you want to buy. So say you want to buy all of your rands value. So let's say you had 1,000 Rand. You just click on that 1,000 Rand. Okay. Then you would say what price you want to buy it at. In our case, 115,000. Okay. If I say, okay, it says sign into trade. I've obviously been signed out. Doesn't matter. Can still show you. This would say place trade or whatever it says. You would then say that. You would click on that, and then your order would be placed for the future. If you want to buy at 115,000 and the price is currently at 119,000, you can't put in an order for 115,000 and expect it to be taken straight away. You're not going to be given it for way cheaper than what it is. So now Luna will wait for price to fall to 115,000 before it buys for you. So what we're seeing here is all of those orders that people have placed for specific price targets, okay, which is essentially what we're going to be doing when trading. When you're trading, you're picking a price target, and you're then either buying or selling at that target. You're placing an order for that targeted price, and you're waiting for price to then reach it before it automatically buys in or sells out for you. So these are all orders that people have placed over here. See, place order. These are all orders that people have placed. The reds are the sellers, the greens are the buyers. So and the spread, just by the way, is the difference in price between the closest buyer and the closest seller. So we can see here's a 1 spread. That's a R1 spread, which means the closest buyer is buying at 119,332 rand, and the seller is selling for R1 more than that. So the spread is R1. There's a R1 difference between the closest buyer and seller. The spread can open up. So the spread can go real big. It can go 100 rand, 1,000 rand. It can get big. But it usually sticks relatively small. Okay, so let's have a look at some of these orders. So I can see, for example, at 119,333, there is an order waiting to sell 3 Bitcoin. Okay? If I scroll, look at these. So here, 119,798, there's 0.98 Bitcoin waiting to be sold. At this price, 119,799, there's 1.079890 Bitcoin waiting to be sold. And let's go have a look where there's a nice big one. If you scroll, here's one. At 120,000, there's 13 Bitcoin waiting to be sold there. There are orders there for up to the amount of 13 Bitcoins. That doesn't necessarily mean that there's one person selling 13 Bitcoins there. It could be 10 people that are each selling, one of them selling 1 Bitcoin, one of them selling 2 Bitcoin, one of them selling 5, one of them selling half a Bitcoin, etc. And it builds up to this amount. But what's important to know is that at this price, that is how many Bitcoin is waiting to be sold. Okay, and then it's the same on the buy side. So we look here and we can see, wow, there's actually quite a lot of buyers in the market right now. As you can see, currently there's 2.9 Bitcoins that's waiting to be sold at roughly the current price. And there's actually more than double that waiting to be bought at the current price. So there's more buyers right now than sellers. Okay, I'll get to why this is all important in a moment. I'm just trying to first give an understanding and an explanation of what it is that you're looking at. And then here on the greens, like I've said, these are all the buyers. These are people waiting to buy. So here's an order, just for example, 119,013 rand. There's 1.423827 Bitcoin waiting to be bought. Let's scroll down. We can find see where we can find a slightly bigger order. So you can scroll. I can't see any huge. Here's a big one. At 117,000 rand, there is 15.33 Bitcoin waiting to be bought. Okay. So what does the order book tell us? Okay, let me tell you. The order book is giving us vital information of where people are selling and where people are buying. So if there is 0 Bitcoin waiting to be sold there, 0, 0.08, 0.005, there's very small amounts. And then all of a sudden, here at 117,000, there's this huge amount waiting to be bought. What does that tell you? It tells you that when price, or if price does reach that 117,000 rand, it's most likely going to go up from there, because there is a lot of people buying into the market. There's a lot of Bitcoin buying into the market. And for a short-term trade, I mean, if you've got a lot of money, all you need is a small movement in price to make a profit. So that's definitely the biggest buy zone here. And then for selling, the biggest sell zone from what I saw, is this at 120,000. There's 13.18 Bitcoin waiting to be sold. Let's just see if there's any bigger ones that we can see here. Okay, no. Alright, so we've got our biggest buy order, our biggest buy price, and we've got our biggest sell price. So we know now what the order book is telling us. The order book is showing us information of where people are selling their Bitcoin and where people are buying their Bitcoin. That information is vital because it can help us to make a decision of where we want to buy and where we want to sell. Now, that is the order book. Let's get onto the depth chart. Now, this might look very confusing to you. You're probably looking at this thinking, what is this? What is this telling me? So, a very simple explanation is the depth chart is a visual representation of what the order book is telling you. So the order book contains the facts, okay? The depth chart is a visual representation of those facts that the order book has given you. So the order book is giving me facts. It's a fact that the fact of at this price there is this much Bitcoin waiting to be sold. That's a fact. At this price, there is one Bitcoin waiting to be sold. That's a fact. You know, that's giving us the facts of where Bitcoin is waiting to be bought and sold. This is giving us the visual representation of that. So, as with this, the green represents the buyers, the red represents the sellers. Okay? So, think of this almost as a staircase of sellers, and this is a staircase of buyers, okay? So, and then here's your price at the bottom, all right? So we know as price goes up, there's people waiting to sell at the higher prices. So this is where we currently are. This is the middle point, the middle ground of where price currently sits, all right? In between the buyers and the sellers. As price go up, people will sell for a profit. Okay. As price goes down, people will buy in at a cheaper price. So that's why the green is on the left as price goes down, and the red is on the right as price goes up. Because as price goes up, from where price currently is, as price goes up, there's people looking to sell at the higher prices. There's people looking to buy at the low prices. No one's looking to sell at a low price and buy at a high price. Okay, that just wouldn't make sense. So here we're getting a visual representation of the order book. Okay, so let me explain what it is you're seeing. So think of it as steps, okay, of buyers. So we know that, for example, if I go here, we see this big jump. Okay, what does that mean? That tells me that there are a lot of buyers sitting at that particular price. Okay, same as here. All of a sudden, price is moving, it's flat, moving up fairly steadily, and then all of a sudden it just jumps up really quick. And it does it a few times with some smaller jumps. So here's a smaller sort of jump, here's another smaller jump. It's a bit of a bigger one, but not as big as the first, where it jumps up here. But basically what we call these are called buy walls and sell walls. So it looks like a wall. It's a wall of buyers, it's a wall of sellers. So what this is telling me is that at this current price, 119,332, there are 7 from the current price down to that price, which is only 1 rand, there are 7.78 Bitcoin waiting to be sold. Okay, if I then move up, if I climb these steps of buyers, okay, I know at, let's say, they're 117,508. From now, the current price, all the way down to that price, there is a total of 26.729 Bitcoin waiting to be sold. Okay, this does not mean that at that price, 117,503, at that price there's 27 Bitcoin waiting to be sold. No, what it means is from now, where price is 119,333 to there, price has to move through 27.93 Bitcoin to get to that point. Okay, and then after you see 31 Bitcoin, price has to move through 31 Bitcoin, and then all of a sudden after this jump, should go up, boom, all the way up to almost 50 Bitcoin. That price has to move through before it reaches the price of 116,995. Okay, so these walls give us a visual representation of where the big orders are sitting. So we can see, wow, there's a big order here, there's a big order here. And I can guarantee you those are the two big orders that we saw in the order book. So here we can see there's a huge wall, which means there's a lot of orders at that particular price. So we look at the price there at the top, it's 117,000. If we go to 117,000, we will see that's where our huge order is. There's 15 Bitcoin, 15.339020 Bitcoin waiting to be bought at the price of 117,000. Okay, but as you can see over here, it's telling us there's 48 Bitcoin, 48.511 Bitcoin that price needs to get through before it even reaches the price of 117,000. Okay, and then it's the same on this side. We see a huge wall here. We know that's where the biggest order is sitting. Okay, 120,000. Here we go. 13.183112 Bitcoin is waiting to be sold there. So the order book, like I said, gives you the facts. The depth chart gives you a visual representation of the facts displayed here. Okay, so I don't need to search through the order book to find out where the biggest order is. I can just look at the depth chart and I can see, okay, the biggest sell order is obviously here at this biggest wall. The biggest buy order is obviously here at this biggest wall. Okay, so that's how we get the visual idea of what's going on here. Now let's get to how do we actually trade this. Okay, great. I know what the order book is. I know what the depth chart is. Now, how do we use this to our advantage? How do we actually use this to actively trade movement in price? So, first thing you need to do is have a look. What is bigger? Okay, what is bigger? Is the sell wall bigger or is the buy wall bigger? So as we can see here, the sell wall is bigger than the buy wall. Okay, that means that there are more people waiting to sell than what there are people waiting to buy. So as we can see, although the bigger wall, the bigger single order is a buy order, which is around 15 Bitcoin here at 117,000. This is only about 13 Bitcoin at 120,000. So this order is bigger, right? But there's still more sellers. So price over here on the depth chart, there's 77.78 Bitcoin that need to be sold before it gets to that price. Whereas over here, it's less. There's 68.28 Bitcoin that needs to be bought before price reaches here. Okay, so now we look at this and we say, if I'm in your position now, I want to buy in. Okay, I want to buy in at the cheapest possible price. So what you're trying to decide is where's price going to fall to and then reverse and go up from. Okay, so for all we know, yes, price could go up from right now, from 119,333. Price could straight away go up, but that's not to say that it's going to, for example, go up to 120,000, and then all of these sellers is going to knock the market back a bit. So the market's then going to drop, and for example, maybe it drops here to 117,000. So you know you want to buy in nice and cheap. So what we always say is when you're looking to place your buy order, you first want to look at where the biggest wall is. That's where you want to place it. Okay, so if you're trading, you want to get in at the cheapest price. You want to put it in your order just before price reaches that huge buy point, because I can tell you now, if price gets to a point where there's 15 Bitcoin waiting to be bought, a big order like that, once price takes that order, the price will move up, the price will go up, and that's how you then benefit off of a small movement in price. Okay, if you've got an entire Bitcoin that you're trading with and price goes up 1,000 Rand, you have just made 1,000 Rand profit in an instance, just like that. Okay, so what we do when we want to buy in is we look for the biggest wall. That is where we want to buy at, the biggest wall. So this is the biggest wall, as we can see. Oops, scrolled a bit fast. The biggest wall, there's 15.339 Bitcoin waiting to be bought. So when price, or if price does fall to that, that is kind of the area that I would want to buy at. Okay, sometimes it looks a little bit different here. In this example, there is a clear and obvious rejection area, a wall over here, and there's a clear and obvious sell wall over here. Sometimes there's a few. Sometimes there will be more than one wall. Now, what I always do is when I'm buying, I go for the cheapest of the big walls. So here there's 15 Bitcoin waiting. If there was another wall here, let's just say for argument's sake, there was another big wall here, okay? And it wasn't, here's 15 Bitcoin, but at this wall, there's, let's say, 10 Bitcoin. It's still a significantly bigger order than most, because most orders you'll always see, most orders are always here 0 point something, okay? Bigger orders are when you get like 3, 4, 5 and above Bitcoin. So if there's 15 here, 15 Bitcoin at 117,000 waiting to be sold. Let's say over here there's, at this price, there's 10. That's still a significantly large order. I am rather going to go for that one, even though this one is bigger, even though there's 15 Bitcoin waiting to be sold. So let me just scroll down to it. Even though there's 15 Bitcoin waiting to be sold here at 117,000, if I had to scroll down, let's say to 116,260, just for argument's sake, and there were 10 Bitcoin here, it's still a significantly larger order to the orders around it. Okay, and what did I say? You want to buy in as cheap as you can. Okay, so you always want to go for the smallest order, unless there is a significantly small order that's still below this, and it's not as big, but it's still significantly large. That's the one you're going to want to go for. Okay, you want to buy in at the cheapest possible price. So now we've identified where we want to buy. Okay, so in this case, with this example, the way I'm seeing things, this is my sort of buying area. This is where I'd want to be buying, around the 117,000 area. Okay, so we're going to need price to drop first before it reaches that. So what I always do is I go and I look at the order here. I see 117,000. There's 15 point something Bitcoin waiting to be bought. I don't want this order to get taken before mine. Okay, so I'm not going to put mine at 117,000. I'm going to put my order a little bit above, because price needs to move down through all of these before it gets there. Okay, because when it gets here, price is most likely going to chew this order up and then move up. Okay, so I want my order to be a little bit above. So I usually like to make my own, so I count. So here we see 117,000 and 1 and 2 and 3, and there's no 4. So that's where I would create my order. I like to have my own order. I don't like to jump in with other people's orders. So I would put mine order at 117,000.004. So 117,004 is where I would be looking to buy, because it's going to take my order just before it hits 117,000, and then when it chews up this huge amount of buyers, price is most likely going to go up, and then we can look at where we want to sell. Now bear in mind, I am giving this example from a trading perspective. Okay, the way that we use it, I would look to buy in, and once I've bought in, that's my job done. I've bought in. I'm not looking to sell. I'm only looking to sell in the future. But if you're looking to trade, if you're actively day trading this, you're looking to buy. Once you've bought in, you're going to immediately be looking to sell. Okay, but before we do that, let me explain something. This could be a trick. Okay, so what ends up happening is sometimes you get people that'll put in a huge order. So say there's a huge amount of Bitcoin waiting to be bought there, all right? That could just be there to manipulate you into making a decision to buy at the wrong time, okay? So price might fall here, and this order is still remains here for 15 Bitcoin, and if it takes it, then price will most likely move up. However, sometimes what happens is price moves down, it gets there, whatever, gets closer, and all of a sudden this order slowly disappears. There's not 15 Bitcoin there anymore. Now there's maybe 5 Bitcoin. Okay? What that tells me is that this was a fake wall. Okay, this was a manipulative wall. This wall is here to manipulate you into making a specific decision. So you've now placed your buy according to this wall, but by the time price reaches there, I mean, that person can take that order out. I mean, I can put in an order here for a large amount of Bitcoin to be bought, and I can just remove the order the second it gets close enough, and then all of a sudden that wall means nothing. Price is not going to get here and move up because there's no wall here anymore. There's no 15 Bitcoin waiting to be bought anymore. So what we always do is, once we've established an area that we want to buy, okay, we then still watch this depth chart, and we watch this point right over here. So this is the next step. So the first step is deciding where the buyers are. Okay, where is the largest amount of orders at a cheaper price, so that you can adequately decide or adequately place your buy order. All right, so you've placed your buy order because you've found your spot. Now what you need to do is watch to make sure that this wall remains there. Okay, or alternatively, that perhaps this wall does remain there, but by the time it gets here to the point where its price has dropped and it's almost going to take your order, maybe there's a much bigger wall. Maybe here there's 15 Bitcoin, but then by the time prices reach there at maybe 108,000, there's 20 Bitcoin. Then you're going to want to scrap your order and go in for the cheaper price, because you can make that decision of, okay, I think price is going to now continue to fall to that point where there's even more orders. But what you always need to do is you need to watch this area. Now, let me just stop there for a second and explain something. This is not some magic method that you are being taught that you can just now do and make endless amounts of money. That is not how this method works. This is a method that takes practice. It takes time, it takes experience before you can really master it or get great at it. It's going to take a lot of time of watching, and what I recommend you do, if you are deciding to trade this, don't actually physically trade it with your money. Rather, what you should do, and this is what I personally did, because I have traded this before, we have personally traded this, we were successful doing it, but we have our reasons for why we don't want to do it anymore, and it's because it is slightly more risky. You can miss out on moves, and we're looking at this for a long-term perspective. But we have traded it before, and what we did personally was, for the first week, every day we came on this chart on the exchange, on Luno Exchange, and we watched, and we wrote down what we would be doing. Okay, so we had written down, okay, we would be, for example, now what we'd do is we'd write down, okay, we want to put this much Bitcoin at this price, whatever price you've chosen, 117,004, because remember, we want to be just before price hits this wall, we want to get taken. So we'd write that down. Then we would watch it, okay, and decide if we want to leave the order in to get taken, or take it out, or change the order, or whatever. Watch it, write down what you would do with your money, just so you can get the hang of it, because this does take practice. It's not some method that we're just showing you quickly. Okay, all you need to do is find where the wall is, place your order, and boom, you're as good as rich. You're going to make money now. It doesn't work like that. It takes practice, it takes time. So what we've done is we first now distinguish that where we want to place our order. Now what we've got to do is wait. Now it's a waiting game. So we've actually got to watch this price. Now price hasn't moved yet, because I'm actually offline here. I'm not actually logged into Luno anymore. So that's why price hasn't moved. But Price, I can tell you now, probably has moved quite a bit. This hasn't moved, but price will normally be moving. You'll see this order book constantly changes. The price, you'll see the walls get bigger and smaller, and new walls appear and things like that. Walls disappear. So what you now have to watch, so now you've placed your order, okay, you've decided this is the area you want to be buying in because that's where all the buying power is going to come into the market. Now what you want to do is actually watch. So you're going to wait for the price to fall. So from here, price will start to fall, and you'll actually see this wall moving closer and closer and closer to the middle. Once it gets close here, that's where you're going to start really doing analysis. This is where the practice comes in. This is the easy part, deciding where you want to place your order. The hard part is deciding whether you want to keep your order in or if you want to change it when the price gets there. So what ends up happening is, here we can see currently there are more buyers than sellers. Okay, the buyers are overtaking the sellers. So what that tells me is that price is most likely going to continue to go up. So that you can see the green is bigger than the red, which means the buyers are overtaking the sellers. Price will then continue to go up. Okay. As soon as the red gets bigger than the green, that means the sellers are then overtaking the buyers and price will start to fall. Okay, so what will happen is, as price starts to go up because there's more buyers than sellers, the buying power is eating away at this little sell wall. Okay, all of a sudden this jumps up. There's a huge sell wall here. At the middle, the red will then most likely be overlapping the green, which means there's more selling power. So what you've got to know is, at the middle, if you want to know if price is going up or down now, right now, you need to look at the middle and you need to decide what's overlapping what. We can see the buying power is bigger than the selling power. The buyers are outweighing the sellers. Therefore, we are saying that the price is going to continue to go up. But once price has gone up, let's say to almost 120,000, it's going to get to this wall. And by the time it gets there, then perhaps the sellers are outweighing the buyers. So you just need to look at what's happening in the middle here. Okay. So when your order that you've placed reaches this point, you are then going to be able to make a conscious decision and say, okay, maybe the green is still outweighing the sellers. And if that is the case, then you want to leave that order in because the price is going to most likely be going up. All right. But if when this order, your order that you've placed, all right, just before 117,000 to buy, when it gets very close here, if all of a sudden the red outweighs the green, you want to then remove that order because price is most likely going to continue to drop. So here we can see this buying power is really here. The selling power is not there yet. But when we reach this price, the selling power may be greater than the buying power and the price may fall. So like I've said, this takes a lot of practice. You need to watch it and you need to learn to understand it. It's not a magic method that I can just tell you what to watch and boom, there you've got it. Now you can just go make money. It doesn't work that way. It takes practice, it takes time, it takes experience. So what would happen is price would fall, your order is about to be taken, then you can make a conscious decision. So first you can look at this and you can decide, okay, the buyers maybe are still outweighing the sellers, so I'm going to hold my order because price is most likely going to continue to go up. Or alternatively, the red is now bigger than the green. You're going to take your order out and you're going to find the next, you're going to repeat the process. You're going to find where the biggest wall is and you're going to repeat the process. So basically the process of buying goes like this. You're going to find an area where there's going to be buying power. So you're going to look for the biggest sell wall. Where are the biggest buy wall? Where are most of the buyers sitting? Once you've found that area where most of the buyers are sitting, you're going to place your order. Once that has happened, you are going to wait. It's going to take patience. You're going to wait for your order to move along, for price to drop to where you want to buy, and then you're going to watch in the middle here to see what's happening. We can see here the buyers are outweighing the sellers. But if price has to now go up to this point, it could turn around and the sellers might be outweighing the buyers. You just need to watch it and learn to understand it. Like I said, it takes practice. So let's say, for example, you've placed your order, price has moved down, the buying power was still there, and your order gets taken. Okay, if you're looking to trade it and make a short-term profit, you are now looking for where you're going to sell. Okay, so now if you want to, so now you've bought. Okay, now you're looking for where you want to sell. So now we're in the market. We own Bitcoin. We have Bitcoin. Now you want to look for, where am I going to sell this? Okay, so like we said again, look for the sell wall. Okay, now remember what I said. When you're looking to buy Bitcoin, you want to be hasty because you want to hold Bitcoin. When you're looking to sell Bitcoin, so you're looking now to get rid of your Bitcoin for South African rands and make a profit, but you do not want to be over hasty with it. So what we always say is, don't always necessarily go for the biggest wall when it comes to the sell wall. Go for a big wall that is relatively far away. Okay, so if you've bought at 117,000, we can see this sell wall is very close. It's right here, right where price is. It's going to give us next to no profit. I'm not interested in that one. I'm going to look to sell at a higher price. Okay, because we're selling, I'm not hasty to get rid of it. Right, when we're buying, we want to buy, we want to hold Bitcoin. So I'm going to be fine with buying here at this wall. But when we're selling, I'm not hasty to get rid of it. And this wall is a little too close for my liking. So I'm only going to look to sell somewhere up here at one of these walls. And this one looks pretty decent to me. Here at 121,000, 122,000. Let's go look what those prices are. How much Bitcoin's waiting to be sold there. So here's a nice area. 121,525. There's 7.5 Bitcoin waiting to be sold. Okay, and that is the biggest sort of area. So that's where I would personally look to sell. What you would then do is you'd place your order just before this wall. All right, just before this wall, you're going to place your order. So in this case, I'm going to place my order. Let me just see here. Just before it reaches there, so 5, 4, I'm going to place mine at 121,503. Okay, I'll place my sell order. The way you do that is you select sell first. So here's when you're buying, here's when you're selling. You'll select sell. You'll decide how much Bitcoin you want to get rid of. So if you want to get rid of all of it, you'll just click on that. And then you'll put in the price you want to sell at, which we have decided that here's where we want to, somewhere here is where we want to sell. You'll put that price in and you'll say place sell order. Then again, you're going to wait and you're going to watch. Okay, what's then going to happen is as price goes up, you need to watch here in the middle what's happening, and you need to decide if the buyers are outweighing the sellers or the sellers are outweighing the buyers. If the sellers are outweighing the buyers, then your sell order is good. You can then sell and then look for where you want to buy again. But if the buy orders are still outweighing the sell orders, rather hold it and look for the next spot where you could sell. And that is very simply and easily how you use this to actively trade Bitcoin. Like I've said, it does take practice. I've given you all the methods. You understand what you need to do now. Now all you need to do is actually practice it. And what I recommend you do is don't actually take money and trade it for real. Rather, for 1 week, just watch the chart. You will get the hang of it pretty quick. It doesn't take too long. If you've got the concept, it doesn't take too long to grasp. You just need to watch this order book so you can see what happens here at the middle when the buyers and the sellers start outweighing each other. And all you need to know is when the buyers are outweighing the sellers, you can see that currently price is going to go up. When the sellers are outweighing the buyers, price will most likely go down.